Good morning, good day, or good evening, wherever you are. Welcome to InvestorExpos show for July 2nd. My name is Anna and I'll be your host today. We are having a great lineup of 4 speakers for you. Todd Horwitz, Brian McAboy, Wally Olopade, and Thomas Barmann. This session will be recorded and sent to your email. So let's begin and bring to the show our first guest, Todd Horwitz.
What's up, everybody? Good morning, and great to be with you at this wonderful event. It's always fun to be here, and wow, what a jobs number this morning, huh? The market's exploded higher, giving back a little ground now, but as always, today we're going to talk about micro and mini futures and our portfolio management style, and really why we call them the next big thing. But before I can do anything, I have to give you the disclaimer, right? You guys can look at that. Options and futures involve risk and blah 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 blah. In the meantime, as we look around, I'm just going to introduce who I am. My name is Todd Bubba Horwitz. I've been doing this is my 41st year of trading. Okay, I founded Bubba Trading. I've written 2 books on options and 1 to come out soon on futures. I regularly contribute to Fox, CNBC, and all the major networks. And the key that I always care about is every recommendation that leaves my office, I'm in. I trade myself. There is nothing that I don't trade that I recommend. Okay. So in the meantime, I always like to bring out the bad stuff in the beginning, because if you've traded for any length of time in your career, you know that drawdowns are part of the business. Okay. Anybody who tells you they never lose, never ever draw down, never go through a streak is a liar. Okay, the bottom line is understanding how to take best advantage of those drawdowns and how to put yourself in the best position and manage yourself through with proper money management and discipline and things like that. And once you get that, then the drawdowns actually become an opportunity. Okay, that's what we look for, because we create a lot of opportunities right out of our own drawdowns. Now, the next big thing, and of course, if you know anything about futures at all, or if you don't, doesn't matter, but right now, the micro and mini futures came out about a year ago, okay? And they were the #1 launch in the history of the Chicago Mercantile Exchange. I personally believe that mini and micro futures are going to replace options for many, because they've got so many more advantages, including tax advantages, because they get taxed at a different rate than equities and options, and also they don't have the pattern day trading rule, which I'm sure many of you might have come across. But in the meantime, so why micro and mini futures? The first thing is capital efficiency. Okay, you can start with a very small amount, and the one thing you want to understand about futures is there's no worries of implied volatility. There's no real big offer spreads, because they're always typically 1 tick away. There's no premium to deal with, so you don't have to overpay as many have done with options in the past, because we know one thing about options: they're always fairly priced unless they're expensive. And here the futures are priced in the best form of a price discovery market. So you get capital efficiency, you can diversify different asset classes. The fees and commissions are commensurate with the size of the contract, which was a mistake that the CBOE made years ago when they tried to come out with mini futures. They did not adjust the fees and commissions. So that became a big thing. And the other story is no FINRA day trading restrictions. You don't get shut out because you made more than 3 day trades in a week. Okay, so this is very big if you want to be active. Now, we are not going to talk about an active model today, but the product in general is phenomenal, and that's where we became and started to create these portfolios, because again, we want to be able to deal and help all investors. That has been one of my goals, and since I've been so fortunate in this industry, I've always wanted to help others do better, including I have a program in high schools trying to teach them financial literacy that I donate to 600 high schools so far. Now, what we're going to use and what we do is we have a proprietary algorithm. So we're doing algorithmic mechanical trading, and every decision is made. And one thing I can tell you with 100% certainty is we never make a change during the day. Okay, all of our trades come out. If there's going to be a trade or a change, they come out early in the morning, well before the market's open, and you're up and ready to go and set when you get there. And the other thing that's important about the algorithm, we're trying to hit home runs. We don't care about the time you enter. You know, I have members worldwide, Japan, China, Switzerland, Australia, California, Hawaii, Alaska, everywhere. So I have every time zone in the world, so it doesn't matter, because again, we're not worried about one tick or two ticks. We're worried about going for the bombs and going for the home runs, knowing that if we're wrong, we'll be reversing and go to the other side, because we are always in the portfolios that we trade. Now, today we're going to talk about what are our objectives, what are managed futures. It's the math, our portfolios, how you can take advantage, and as always, I will answer every question you want to ask me about anything. Okay. Now, mechanical trading, the major reason that traders lose money in the long run is because they miss trades, they let losses run. This is probably the biggest fallacy, is they let losses run, but on the other side of that coin, very often they take profits too soon. Okay. So one of the problems that many have is they take the profit right away because, oh, I got the money, I got to take it. But the loss, they go, well, it'll come back. Again, that's not the way you should ever trade under any circumstances on anything you ever trade. So whether you become one of my members or not, don't do that. It's not good for you. Trust for me, 30 years on the floor, 41 years total trading. I'm telling you, that's not the way to do business. My method does none of it. Okay, it's strictly a pure mathematically based model. Okay, that's in and out and makes the trades when it's supposed to. And what it's using is 120 years of experience of reading charts, mechanics, math, and it's put together in this proprietary algorithm. So we never miss a move. We never miss a major move. In fact, last year in 2019, we were long the NASDAQ 48 out of 52 weeks. What we're really doing here is using a probability model, okay? And that's where every type of trading I do, whether I'm day trading, which I was day trading very heavily this morning. In fact, I traded live my account with some members for the jobs number this morning. Everything's about probability. It's only about rules. I don't care about anything else. Nothing else in this business matters. If you can get that into your mind, because there is no secrets, there's no magic formulas out there. It's about understanding how to use the probabilities in your favor. It's very similar if you are a game player to poker, gin, bridge, and backgammon. In those games, the best player will always win eventually. All right? The grind out comes to the better player, and traders are the same thing, because in trading, we are also competing against other traders. So if you keep that in mind and always understand that, you'll always be in the best shot in the best spot to make money. Now, just a quick note from my professor at Cornell. Yes, Todd, very impressive market price analysis. Yours is the best in the world. Most consistent methodology, most rigorous. Drop the emotions, don't listen to the pundits who comment on casualty based and reading the news, which is a fact. If you trade the news, you lose. Now, again, as I just said, there ain't no secrets. Okay? There's nothing magic out there. Nobody has inside information, especially in today's world. You know, when I go back to when I first started trading in 1980, there was a little bit of information you could get because there was time. I traded in an office with 50 traders. You know, we shared and we all went to the floor, but we had two little 12-inch LED computer screens to get quotes. Right now, everybody's carrying a laptop in their back pocket with their iPhone or their Galaxy. So again, there's no secrets out there. There's no secret indicators that are going to be right. In fact, I can prove to you, I won't have time today, but I can prove to you how they're wrong. Rules-based. This is where we get into the real, this is what separates amateur traders from professional traders. If you can follow rules, you're going to make money. You're not going to make money every trade, every day. You're going to make money. You're going to make a living. You're going to make money over time, because professionals, all we do is use rules to trade. Everything has a reason. And if you don't understand that, you're making a mistake. And as I said, I want to teach you these things, whether we're together or not in the future. I want you to learn them for yourself because I hate to see people lose money. So we professionals are always using a rule-based system, right? And here's the rules that I teach to begin with. To win in algorithmic mechanical trading, you must have no opinions about the market. Zero, none, nada. The minute you form an opinion is your first step to losing. The minute you become opinionated about anything in this market is your first step to being a loser. If you violate rule number one, you're going to lose money. A trend is the basis of all profits. If you do not understand this, you should not be trading. If you pay attention to the news, you will lose money trading. If for 1 minute you think you know more than the market, price is too high or price is too low, the market will take your money. It will always punish those traders with such hubris. And I'm telling you, these are all facts. This is not supposition. This is fact. Okay. We never sell the top, nor do we ever buy the bottom, because we're not interested in trying to use our opinion to figure out where the bottom is. The market will tell you everything you need to know. Just for example, this morning on a short-term basis, we shorted the NASDAQ and we bought gold. You can go take a look at where they are now, where they were then, and they're pretty healthy winners as of right now. And those are on short-term trades. If the market is going higher and you are short the market is right and you are wrong. If you are long and the market is going down, you're wrong. It's that simple. Don't make it complicated. If things are going against you, you're wrong, get out. The objective of mechanical trading is to mirror the market. You always want to be doing what it is doing. And if you do, you will put high probabilities on your side. Trend mechanical trading gives you a statistical edge you cannot obtain elsewhere. Profitable traders understand that edges are essential to long-term probability. And I just referenced a friend of mine, Richard Dennis, you might have heard of before, the Turtle Traders. I traded with him. We traded in the same pit for a while. He took 20 people from all different backgrounds and taught them how to make money, which is what we want to do here with you. Okay. And this is why you're going to see this email here. I've been following Bubba for approximately 1.5 years. Since I began following him, my account has steadily gone up greater than 100% in the first year. This isn't to say there won't be periods of pullbacks or drawdowns. There will be. They're inevitable in any successful trading system. They will be stressful. When they occur, hold your positions, follow new trades. When provided, do not overthink the process or overvalue what you're hearing about, what you're seeing in the charts. If you follow the rules and stay the course, a rising account, net liquidity, you will be rewarded. The few times I did stray from the program rules, I cost myself money, but reinforced the need to follow the program without question. The biggest temptation to book profits on positions going your way, coming in support and resistance, I urge you to look at the long positions in NASDAQ in October of 2019 or gold in June 2019. There are many more, but approach resistance, and the temptation would have been to take in position off and take those profits, blew through resistance, and went on to book huge profits. Okay. Now, our objectives, and hopefully yours, are to be guided by rules. We're not interested in gut instinct. Okay. We don't care about ingrown hairs and places that we don't want to talk about. We are, again, 100% rule-based. We have defined entry and exit timelines. Right? Again, the prices are not important. We know when we have to reverse. We want to be able to set it and forget it, which is exactly what we do. In fact, half the time, I don't look at my portfolios during the day, and I'm in 7 myself that are traded through our letter of direction trading. But in the meantime, we don't care about anything else, okay? We are not going to get involved in anything that's subjective. Subjective costs money. What are our objectives? Make money, right? I mean, nobody wants to hear is here to lose money. Every year, either learn something or make money. Okay? We want to try to keep the variance small. Now, again, we can't always control it, but we try to keep it as small as we can. We want to be balanced. And of course, you want to keep the drawdown small. Now, trend trading, okay, a good trend following system will keep you in the market until there's evidence that the trend has changed. What better can you ask for? Now, one of the greatest traders in the world, successful traders, always follow the line of least resistance, follow the trend is your friend. Jesse Livermore, of course, he couldn't control himself at the end of the day, which is why he hung himself, but he couldn't take the fact that he was right and he understood it perfectly. So he ended up putting himself in, and obviously he committed suicide. But again, he understood the base rules, which is what made him successful, and so many of his quotes so good. Now, I don't know if many of you have ever heard of the family office. All right? Now, family office is typically reserved for big money. I mean, multi-million dollar clients and bigger. And they get all these special favors, all these special things. We don't have that, but we have the Bubba office, we call it. We are trying to share and show everybody, whether you have a $5,000 account or a $200,000 account, whatever you have, we want you to join in the success of the family office environment, which is why we have training sessions together, which is why we have a chat where everybody gets to talk, because we all know what's going on together at the same time. So we want to create the ability of a family office, but because, again, you know, we don't have billions of dollars here that we're dealing with. We want to be able to help everybody so that you can all grow your accounts to get to the next level in your trading and investing career. And we talk about emotions. Now, again, from a floor trader's standpoint, we had a saying on the floor. Now, I traded in the OEX when it first came out in about 1982. At the time, it became the biggest pit in the world. But we had a thing there, and it was when you can see a guy's tonsils or a gal's tonsils, you know they're wrong, give them whatever they want. So when you get that emotion behind you and feel you have to do something, I urge you to sit back and take a deep breath first before you do that, because you're invariably going to be wrong. The key to trading success is emotional discipline. If intelligence were the key, there would be a lot more people making money. Think about that. Yeah. Now, trend trading is what we're going to do. We've actually bettered the terms. Price is everything. Okay, price is everything. Charts, you can take the charts, you can take all the different ones. They're all the same. All right. When you finally learn that, and hopefully you will, all charts are the same. All patterns repeat themselves. It does not matter whether you're looking at corn, the NASDAQ, or the weather, which there is a weather pit, by the way. Ignore the news. You trade the news, you lose automatically. You buy a future when it's breaking out, you sell it when the trend changes. Don't get out before the trend changes direction. And I always like to share with people, this is a classic and a classic error that many made that are even my students, because again, everybody's got this, we all have the same issue. Everybody's got that emotional clock that they have trouble dealing with. Well, if you go back to last year, okay, in Amazon reported earnings right here in October, okay, a year ago, not quite, well, about 9 months ago. And the stock got clobbered. And everybody was emailing me, oh, should we get out of the NASDAQ? Do we get out? Do we get out? Do we get out? I said, look, I'm getting out. If you get out, you're making a mistake. Let the algorithm tell you when it's time to go. Well, so if we take a look at the NASDAQ in the same frame, here's that same time frame. There's the NASDAQ. If you got out, you made money, but if you stayed like you're supposed to, you ended up making another $30,000 by having enough patience to stay and follow the algorithm. Okay. So again, stick to the system, stick to the rules. We know, right? Amateur traders want to be right. Pro traders want to make money. Do you want to be right or do you want to make money? That's a question only you can answer. Right? But the system, the proprietary algorithm that we have, it has a win rate of 66%. Is that important? You bet your ass it's important. A win rate is everything. Understanding, because the truth of the matter is, you can give me any system and I can show you how to make it a winner. But the real question is what? The real question is, can you emotionally handle what it would take to make any system a winner? One of the big problems when people come to you and tell you, well, we back tested this and it's great and it's great. Does anybody know, if you want to type in the chat or the question box, why that is meaningless and why you can't you can make any time you back check a system it works? Anybody know why? I'd be curious to know if anybody knows the answer. Okay. In the meantime, I will move on, but I will look up and see if anybody throws that answer in. Again, so what we talk about is, again, it's a probability model, right? So we want to be able to compound and use our probabilities to our favor, which is how we actually add to our positions when there's time. Right? When everything fits correctly, we start to double our positions and add contracts so that we can become bigger, so that we can make more money. And it works like a clock, as long as, again, you're doing the same thing, following the rules of the business. Dear Todd, thank you for making the changes to 72K. You are so successful. You still take care of the little guy. You're always ahead of the game. I admire that. You are an inspiration to me, an example to follow. Thank you. And I love that. Now, we have 4 different mini micro portfolios. So what you're going to do is I'm going to show them all to you, but you're going to pick one. Okay, so when you decide that you want to become a member, you're going to pick one. So we've got one that the size, we call it the 28K. What does that mean? It means that we want you to put in $28,000. Okay, the margin requirement for that is $9,968. Okay, but you're opening with 28 because we want you to have 3 times margin. Why? Because again, what if you start with 99.68 the first day and you get a drawdown and you get a margin call? We are adjusting to help you with your emotional balance right from the beginning, because again, we understand it, we know it, we do it ourselves, so we know all about helping people get out of their own way, which is an important, very important part in this industry, is knowing how to get out of your own way. Okay, so we've got the 17K and we have 2 versions of the 5K. The reason we have 2, the original one, if you guys remember back when the markets went crazy and oil went crazy, they went so bananas with the margins, they made the margin on the 5K too much for a 5K portfolio. Now they're back in sync, but so we added a different 5K because again, we always want to make sure that those that want to be involved can be and will be. Okay. Now, this is our 28K portfolio. Okay. Now there is 18 positions in here. They're always either long or short. We are never out of the market. You are in 18 markets every single day of the year. You are never, ever out. Okay. What I show you is these are the entry dates of all positions. And many of these dates are actually older, but if you know anything about the futures market, sometimes, like for example, the S&P just rolled from June to September. Well, we just had to roll. So you'll see a lot of the June stuff was rolls. We haven't made a trade yet this week. Okay. So again, we don't make a lot of trades. We're not looking to be active. We're looking to be able to stay and play with the trend as long as possible. But what you'll see is you'll see the original fill, the last price, and then we show you the P&L. Win or lose. Again, I don't hide anything. I have no interest in not showing you exactly what you're doing each and every week. Okay, and we'll talk more of that in a little bit. But in the meantime, the ones that you see shaded, we call these mega trades. So right now on the crude, we're up almost $3,000. On the natural gas, we're up almost $2,500. But we have $500 as the benchmark we call for a mega trade, and we've had many of them. Now this is the actual statistics of the 28K, 18 markets right now. 18 trades, 1 loser, 17 winners. Average winner 460, average loser $85. Our profit factor, which is this is sick. It'll come down, right? Again, I would never even promise anything, but right now it's 92. So that means for every $100 you're making $920, $9,200. Okay. So again, that's what it looks like. But here is the actual stats since inception. Here, this portfolio is up about 135%. Okay. And this is as of last Saturday. These reports come out every Saturday, just like this. I'm going to show you what an actual live report looks like, but it's a little bit too small to get out to show you all this information. This is our equity curve, okay, which you can see the equity curve continues to rise. And we use this. Why? Because if you remember what I said a few minutes ago, all charts are the same, but even an equity curve chart is the same. I would have bet you a lot of money that the markets, this equity curve would have sold off when it made what we call the blow off pattern. And certainly it did. Now, fortunately, members like me and the many that have been with me for a while, we were actually pressing our portfolios down here and adding contracts. And of course, we've started to get the next move up. Our 17K 5K portfolio requires about 5,700 in margin. Okay. Again, this is in 15 markets, long or short, same thing, dates, everything is accounted for, so you always know exactly. Now, the difference between the 28 and the 17 is the 17 does not have natural gas, it does not have crude oil, and it does not have the 10-year notes. So this is about the most conservative portfolio that there is. This one has typically the least amount of variance as a rule. Okay. And if you haven't noticed here, right now we're short the NASDAQ. I mean, excuse me, we're long the NASDAQ futures, we're short the Russell, we're short the S&P, and we're short the Dow. Okay. Now, hey, you know, again, it doesn't matter. I don't think about it. I'm not worried about it. I don't look at it because I know that what's going to happen is when it comes time to change, I will be changing and I will get on the right side of the market and I'll make a lot of money. It's just, I mean, we actually got long on March 23rd and we just reversed 2 weeks ago. So again, never a concern. I never think about it, never worry about it. And here are the stats here, okay, for the 17K, 14 open winners, 1 loser, 22 profit factor, again, 161% lifetime to profit. Okay, so for pretty reasonable returns. Here's that equity curve, same example. We had the big spike up, figured it would come down, and we're pressing up down in here. Okay, so many of my people went from 1 to 2, some went from 3 to 4, some went from 10 to 15. Okay, so again, there's all kinds, you know, depending on the size of account you're trading. And then our 5K, now this is the original 5K, but again, as I said, the margins got a little bit ridiculous, but again, we had the Dow, gold, NASDAQ, and soybeans in it. Okay, and here is the trades again, eight times profit factor. The portfolio itself is up 107% over the period of time. And again, here's that equity curve. You can see the very big drawdown, which was really just an opportunity to look to add more had you been in since the beginning. But again, that's you get everything from me as it is. There is never you never miss out on anything. I don't hide any numbers. I give you exact. And then the brand new 5K, which only takes 1186 margin, okay, uses a couple of currencies and a couple of grains, right? And this is too new to have an equity curve or much. We just put it on a few weeks ago. But again, right now it's basically more on its tracking. It's up 51%. Okay, with a 3-point profit factor. People celebrate 2. We're usually in double digits. Now, here's my portfolios. Okay, I'm going to show you a couple of them. This is my original 28K. Now I put this one on. I opened this account with 15,000 last November. Now I represent all the portfolios. As I said, I've got 7 portfolios from our big ones all the way down. But so I can show them and share them with you. But here, so you can see this was on February the 17th of 2020. I had 22,000, so I was up 50% at that point. The equity curve said it was time to roll, and you can see that's my account. That's a real live account, real money. So I pressed. The account went to 34.9, and that was on April 4th. And you can see I've got 2 contracts across the board. Okay. And then as of this morning, okay, it went to, this is July 2nd at 9 o'clock this morning. Even with plus money this morning, and it's got 42,737. So from 15,000, it's now at 42, and I'm on my way to pressing the 3 contracts per portfolio. Okay. So again, I'm just going to look at. I'm just going to get a real quick update right now. Where it's at right this minute. Okay. Just so I can. With the markets where they are, it's up $442 right this minute for today. Okay. Now, again, these are the results of all the portfolios. These are real results. Again, real money, because again, what you'll get from me every week is you get something like this. This is the actual report from last Saturday. They come out every Saturday. I know it's a little hard to read because it's smaller here, but basically what you're seeing is what I just showed you. Okay, this is the updates. Okay, but here's the key. So I show you every week. Every week, red numbers or green numbers, I don't hide them from you. They're always right there in front of you. So you get to see them and evaluate with your performance. So you know always what is happening. and here's the 17. And same thing again. Win or lose, you get to see the numbers. We don't hide from anything. Okay? Every week, there's the report of the numbers. You can see them as clear as they are. Again, we do not want, it's not my intention to ever mislead anybody. I want to be able to share with you straight information that is factual and real. Otherwise, it's no good. Okay? Now, I did have somebody knew I was doing this. I asked some questions, and I have a margin account at IB. Could I trade in this account, or would it be preferable to open a separate account for futures? You trade anywhere you want. If you can track it and don't get confused and aren't using computing products, then sure, go ahead and keep it at IB. Again, I have multiple accounts. I prefer this company CTG, which I'll talk about in a minute. I prefer them because they do letter of direction trading for me. So I don't do the trading myself. I let them do it. They get the trades from me. I send out every morning at 3 a.m. I send the trades. Okay. If I open a separate account trading 128K, how much should I fund it with? 28K. The number of the name of the portfolio, which is 28K. That's how much you want to open the account. Okay. I've not traded futures before and have no idea how their margin works. Again, that's exactly how it works. 28K gives you 3 times the margin. I'm in the Central's time zone, not really a morning person. So when your trade alert's coming out at 3 to 4 a.m., I wouldn't be making trades until 8:30. It doesn't matter. Again, I know I have people, like I said, all over the world. Okay. I could make the trades myself because I have them myself at about, I start every morning about 1:30 a.m. to Chicago time. That's Central time. That's when I get the trades. I have them and I can do them, but I let CTG do my executions at 7:30 Eastern time every day. Okay. If I decide to go with CTG to automate trading, what is the cost? Their cost, their letter of direction cost is a touch over being self-directed. I don't have the exact number, but it's very inexpensive. Plus the fact that we do not trade actively. Again, we haven't made a trade yet this week. So, and again, obviously, we hope we never make another trade. We just hope the markets keep trending and trending and trending in the same direction that they are right now. Okay. If I sign your monthly plan, can I switch to annual later? Of course you can. Look, I'm very flexible. First of all, I don't want unhappy people. Okay. I'd rather you, if you're going to be unhappy, I'd rather you not sign up. Okay. That's a fact. Okay. I like happy people. Okay. Can you advise them when you think it's preferable time to initiate the position? Yeah. If you become a member today, put the positions on Monday. Again, we want to be in all the time because nobody knows when the trend is going to change. Nobody knows when something's going to happen. And we know one thing for sure. If we're wrong, guess what? We're going to reverse. Doesn't matter. Okay, because we're going to always be on one side of the market or the other. So we're not trying to pick a specific time. Now, if you want to take advantage now, first thing is we have daily text and email updates. Again, every day at 3 a.m. Chicago time, an email goes out and a text alert goes out saying these are the trades or no trade. You get a weekly portfolio with the updated profit and loss every single Saturday. Training sessions, I have live, which I do every couple of weeks, if not sooner, and they're all recorded. When you become a member, you go into your members section and you can listen to any recording I've already done. And then we also have letter of direction trading available, which just means that it's your account, nobody can touch your money, but CTG has your permission, if you say so, to trade the recommendations that I give, okay, and only those, okay? So again, you're not giving your money to anybody, it's your account, you get to keep it, you get to handle it, but if you'd like them to do the executions for you, which many like, I mean, it's a big percentage of our business because it's so easy and it keeps people's emotions away from it, it works well. This is what an update looks like, okay? So you get a daily email update, I just send new trade alert, reverse long to short December coin. Okay, that was last week. Okay. Again, that's the only thing you get. And if it applies to your portfolio, great. If not, you get no trade. Get a weekly update where I do a write-up of the week and talk about the different things that had happened during the week. Plus, you get to see all of the portfolios that are out. So if you're in one, you know, many of my guys and gals have started with the 5 and now they're in the 17. Or they started in the 28 and then they moved up to our bigger ones because we've got them that go as high as 250,000. Okay. But again, so I give you in this thing, you get to look at all of them to make your decisions, but they all have the same product, right? If you're short the S&P, every portfolio that we run is short the S&P. So they're always in the same positions. It's the number of products or the size of the product that it's trading. You get training, okay, and you get recordings. So I give you all of it, and because again, my objective is to make sure that you know exactly what's going on. And typically, I usually plan them about every 2 weeks. But what happens if I start to see questions that people are having, I do them sooner. You know, I'll do them at the drop of a hat because A, I love training people and making sure everybody understands it. So I want to make sure that you're ready and prepared to go. Okay. So if you want to become a member with me and join my club and join my team, love to have you. Okay. If you want to come in my monthly club, it's $129 per month, BubbaTrading.com/futures. You want to become annual for $1,400, BubbaTrading.com futures year. Okay, it's all case sensitive, and I'm taking 50 members only. Okay, that's my limit for today, 50 members only. All right, and this will be the last time until minimum the fall that we're going to offer this. All right, we're going to shut it down. So you want to become in, we'd love to have you. And again, we do extremely well. You just saw my own portfolios, and of course, we're doing very well right now. So here's your two choices, either monthly or annual. Okay, if you need me, you can email me at bubba@bubbatrading.com. Does investing in these portfolios mean I need to buy and sell stock, or am I investing money? You are doing, well, you're not, you can do it yourself. Many people, they call that self-directed, or you can open an account with like a CTG, and they do the trading of that portfolio for you. They're not taking your money and can do nothing else with it. You have an agreement with them that says you're signing for a letter of direction trading for this portfolio and this portfolio only. Okay. So you're talking about like a CTA product or something that you're investing in a group where they're doing their own thing. They're following what we call a letter of direction, which is exactly what this is here. It's a letter of direction trading that they can only by law trade the specific recommendations that we get. Okay. So again, if you have any questions, feel free. But again, we're smoking it, and it's been an unbelievable product. In fact, by the end of this year, by the end of other than my personal day trading, which I do when I'm around, you know, I'm not always around, but you know, I trade a lot of stuff live. So again, other than that, this will be all the trading I'll be doing, and all my portfolios between this and my hedging models. I have nothing else to do. I'm very happy and very successful, and don't worry about it. And again, I don't look at these half the time. In fact, I wouldn't have looked today, except I knew I wanted to show you exactly where we stood today. But it's, again, it's a great model that takes all your emotion out, gives you a wonderful opportunity to really take your personal trading and your personal investing to the next level. You can use it in an IRA if you want. In fact, I've got, my wife and I both have an IRA that uses the futures. Okay. So again, you get everything you could possibly want to get out of this. And again, it's bubbatrading.com/futures for the monthly, or bubbatrading.com/futures year for the annual. I would love to see you aboard if you want to join us. And if you have questions, I'm happy to take them. I know that I had a time crunch. I got done a few minutes earlier, but so I'm here to answer any question you might have. Okay, about the portfolios or any other type of trading, feel free to fire away, because I'm always here to help. And when you do email me as members, typically you get responses with it less than 5 minutes. Okay. So again, we're nailing it, and have done so since the inception. And just to give you, I'll share with you what we call the big boy, which everyone was born from this portfolio. Okay, this was the original portfolio. Okay, it's called the 226. Okay, this trades 28 products. Okay, you can see the profit factor 11.8. Okay. This is up 828% since November of 2016. Okay, here is every result for the last 2 years, every week. And again, I don't leave the red numbers out. Okay. Again, I'm not interested in giving you BS. I want you to know exactly where it is and what you're doing, because when you learn to understand that, you know when to take advantage of it. Can you show the portfolio sizes again? Sure. Absolutely. Oh yeah, right there. Do we decide now? You decide when you're ready to invest, okay? But you want to pick one, okay? And again, if you're not sure, let's say you got 30,000, okay, and you're not sure, I would start with the 17K. The 17K typically will have the least amount of variance because the 28K, when you add in crude oil and you add in natural gas and you add in notes, it can have a little bit more variance. Now again, that's up to you, but from a conservative standpoint, they're both going to make a lot of money. Okay, but again, you get, if you remember, we were short crude oil when it went negative. Okay, and we've been long crude oil for quite a while now, as you saw. But you can do any of them you want, and it's your choice, and you can change when you want as well. Because our goal, obviously, my goal, wherever you start, I want to get you to the next portfolio, or at least in multiple contracts in the portfolio you're trading now. Okay. Again, that's my goal is the same as yours. Okay. Again, I love the fact that when I do a seminar in Vegas, I get a few hundred people show up just to talk to me for 3 days. Okay. Because again, we've got a lot of happy members that understand it. And again, understand the entire concept of the market, which is what we want you to understand. Because again, for yourself, again, whether you come with me or not, okay, I want you to be comfortable and have a good time. So whatever you're going to do in your own trading and investing life in the future, just again, remember the few things I told you about the rules and some of the things that you have to do, because it will help you. Again, whether you remember mine or not, I don't care. Love to have you, but if you don't want to be a member, it's okay too. I want you to be a happy person, and I want you to enjoy, and to make money. I'm tired. I've been doing it. I've been doing this a long time. I've seen, I don't know, probably 25,000 people come and go over the years, go broke on the trading floor and other places because again, they couldn't get their opinion out of the market. So again, I'm on your side. I want to work for you. And again, as I get ready to get signed off, because I can see my clock is ticking, it's bubbatrading.com/futures for the monthly. It's bubbatrading.com/futures year for the annual. And right now I've got there's about 7 spots left. So if you want to join, I'd love to have you. But to all that you have signed up and all you new members, welcome aboard. You'll be getting an email this afternoon with all the portfolios and all the information, and you'll be ready to go for Monday. Okay, Anna, I did it. I gave you a minute extra.
Well, again, welcome everybody. I'm glad you're here. I really am. Welcome to the proven formula for profitable trading, the 5 keys that ensure your success. This is brought to you by Brian McAboy of Inside Out Trading. That would be me. And there we go. Since we're talking about trading and investing, I do have to include this quick disclaimer. As you know, trading involves substantial financial risk. This presentation is for education purposes only. It is not intended to induce anyone to initiate any investment or trade. Your trading results are entirely your responsibility. Now, one thing that's a little different about this presentation, I don't have anything for sale. I do have a free gift for you. It's a free report called Trading Psychology's Missing Chapter. And I wrote this a while back because, what you don't know in trading can and will eventually hurt you. It really will. And I want to make sure that doesn't happen to you. So I'm going to go ahead and send this link over to Anna so she can post it out to everybody. And so, this will be free to download. You can go just straight there and get it. It's a really good report, and I know you'll find it helpful. And all right. Now, the reason why I'm here, there are a lot of good people needing help in the trading world. And as far as the toll that it takes when your trading isn't working financially, personally, I know what that's like. My first year of trading was probably the worst year of my life. And I do what I do because I want to help you get to where you want and to avoid the heartache and anguish that's so common in trading. I have people coming to me. I've been helping traders for over 14 years now. And I have a lot of people coming to me that have been trading for, 2, 5, 8, 10, 12, sometimes 15 years. And they're still struggling. And it really has just been a huge weight on them and a stress on them, them personally and their family. And I really want to help, the good people that get into trading, and I include you in that. I want to help you avoid all that and really get to where you want to be quickly. Now, what we're talking about that I bring to this, my background is quality assurance. And the power of quality brought to trading, what's really cool about this, trading, the way I look at it, it's success by design. It really is. As far as quality assurance and the whole field of quality, it's all about getting good at whatever your money-making thing is. And in trading, of course, it's placing trades, but in any business, you have a certain thing that you do to make money. And trading is about getting good at it and then making that very consistent. Now, this whole quality assurance, the tools and practices and learnings have been proven over decades in every industry in the world, and they are perfect for traders. Now, you're in the right place if your goal is to have your trading, be an asset that generates income and builds wealth. If you want your trading to run well and you want it to run consistently, if you don't like losing money, and if you're in this for the long term, well, yeah, then you're in the right place. Now, I know these sound really general, but this is absolutely true, and this is part of the perspective that that you really need to hold when you're looking at trading with 5 keys. And what you'll discover today are some, perspectives that are critical for your success. You're also going to discover a tool and a process to troubleshoot your trading when it's not working. This is huge. I have a lot of people, they'll come to me again, the trading's not working, they're not happy. And they're like, Brian, just help me figure out what's wrong and, what I can do to get things working again. And that's what I'm going to share with you today is a tool for doing that, one of the quality tools. And it's very simple, but it's very powerful and very useful. And it's also going to summarize the 5 keys for profitable trading for you. Now, Einstein was a really smart guy, and it's important whenever anybody's looking to solve a problem that you pay attention to this. You can't solve it from the same consciousness that created the problem. You have to, you must learn to see the world anew, or at least, look at things from a different perspective if you're going to, solve the problem and get beyond it. And the first thing with that is really understanding trading as a process. One of my favorite things to ask people is, what is trading? And they'll say, well, it's buying and selling securities, for profit. And in one perspective, that's true. But it's a decision-making process. And it's something that you'll be doing, hundreds or thousands of times over the coming months or years. It's, yes, it's one trade at a time, but you have to look at it as a process that you're going to be doing repeatedly over and over and over again. And holding this perspective instead of just being focused on the trade at the moment, but again, coming to the whole trading matter, a little more generally with a different perspective, it helps you step back and not get so caught up in the moment and the emotions of the moment. Now, the tool that I'm going to share with you, maybe you've heard of it before, but maybe you haven't. It's really cool. It's one of my favorite quality tools. It's called the fishbone or cause and effect diagram. And again, looking at trading as a process, you're going to have, certain inputs to your process that come from different areas, but you have different inputs and causes that create an effect or your output. And this tool is to help you kind of organize, the different pieces that affect your output, the output of your trading process. And in manufacturing, that's where I got my training in quality, and I'm a certified quality engineer. I got a lot of years in quality. In manufacturing, they call it the 5 M's, and these are the areas that your inputs come from. You have man, machine, method, materials, and measurement. And these are the 5 areas, that include the different inputs that create your results. Now in trading, we've got it a little bit different, but we're going to look at it as the same thing because essentially it is the same process. We're manufacturing trades. This is where we're producing either profits or losses, and it's the same. It's very similar. You've got man, machine, method, materials, and management. We're going to get into the details of it. And again, this is where you can understand if things aren't working in your trading. It's going to come from one of these areas. We're going to look at the specifics in these areas. So again, if your trading's not going the way you want, this will help you know where to focus to get things working right. Okay, so let's just go ahead and jump right in. The first part here under man or person is your attitude and your mindset, obviously. And really, mindset is key. It really is. It affects everything. It's what you believe about yourself, your trading, your money. It's how you perceive your reality. Your mindset is, your expectations, your thinking, which drive your actions. So yes, of course, your mindset, and again, your attitude. Are you bringing a positive attitude to it, or is it a pessimistic attitude, or you're just fighting futility and despair, or are you optimistic and staying positive about things? This is absolutely critical in your trading. And the next part of what you bring, your personal contribution or input into the trading process is your training and your skills. Now, one thing that, one big mistake that a lot of traders make is, they don't understand that trading is a skill-based profession. It's not one where you can just jump into it, grab a system and start throwing money at the markets and retire tomorrow. No, it just doesn't work that way. You actually stepped into a whole bunch of different roles when you chose to become a self-directed, self-employed trader. You're the business investor. You're investing in your trading business, just like if you're handing it to somebody else for them to go, do their thing and make money for you. You're the business planner. You're the startup manager, because like any operation, it's going to go through a startup phase. And you're also the trading system, you're the trading strategy and system analyst as part of the business planner and startup manager. You have to understand systems and strategies and how to choose them, how to evaluate them. You're also the trader, and you're the self-employed business owner and manager on a day-to-day basis and a month-by-month basis. So you have all these roles, and these roles all have skills that are involved, and it's really important that you understand. I don't know if you're familiar with the Peter Principles, a popular book that came out. I believe it was written in '68, I want to say. But anyway, the book was written because the guy was commissioned to, Lawrence Peter was commissioned to go, figure out why there were so many bad decisions being made and inefficiencies that were occurring in business in general across the United States. And one of the things that he found was that, and it became the Peter Principle, is that a person in any hierarchical organization will rise to their level of incompetence and then remain there. And the big lesson out of it was, you might have, some person, let's say Bob, he starts at the company, maybe, at a low-level position, but he's doing really well. So, hey, we've got this position open, let's promote him. And he jumps into that new position, he's doing really well, and there's another position opens up, so they promote him again. But then, they promote him one more time, and well, Bob's not doing so well now. And so now we're not gonna promote him anymore. And what the big discovery was, and the second part of Peter's discovery, was the Peter prescription, as he calls it. But it's really to take a look at the person and the position that they're moving into, and before you promote them, even though they've done well in the past, you can't just say, well, they've done well in the past, so they'll automatically do well in the future. We have to step back and say, well, let's look at the new position and the skills that are required for that position. And does Bob, he's got the personal assets, he's got the drive, and the initiative and all that kind of stuff, but does he have the skills for that new job? And maybe that's the problem, is, Bob's bringing the personal assets, but he doesn't have the skills for that job. And if we just throw him in there without any, without the proper training, he's going to struggle. And the same thing happens with traders. Because when you jumped into trading, you promoted yourself. Now, a discovery I made a while back is, I had a lot of people coming to me saying, hey, Brian, what I need to fix is me. I get trading, it's easy enough. I just keep screwing up. And the thing is, you don't need to fix you. There's all kinds of bad information out there that kind of supports it. Even the trading psychologists are really wrong. The thing is, you don't have psychological issues. You have lack of training issues. If you think about it, you're okay. You really are. You've got a lot of strengths. You've actually, the fact that you're here, you've demonstrated that you have what it takes to make it as a trader. Otherwise, you wouldn't be here. This is not the place for the average Joe. You've already demonstrated that you're sufficiently okay with money, that you're okay with success, your relationship with money, your beliefs about yourself and your ability to make it, and all that kind of stuff. You've already demonstrated that you're okay. Again, the problem is a lack of training. And if you think about it, if you take a person of reasonable intelligence and ability, and you throw them into a job that they're not properly prepared and trained for, well, they're going to struggle. It's going to be rough. It's going to be stressful, and it's going to be almost impossible for it not to be an emotional experience. But if you take that same person and you give them the training for that job so that they actually know what they're doing and they're good to go, they're not going to have psychological issues. They're just going to go do their thing and it'll probably be okay. Same thing goes for trading. Okay, so the next part of the trading process, and well, all right, so that's the personal contribution, which is a big section, obviously. But then you also have the machine. And this is like the hard side of trading, but that's where you have your computer and your data feed, you got your charts and your indicators, the tools and the machine, again, the hard side stuff that you use. for producing your output, your profit or loss on a trade. And again, these are the tools, or I like to refer to it as the hard side of trading. And then the next part is method, and here we're talking about systems. Now with systems, this is really important to understand. I mean, obviously, yes, the method that you employ, that's your system. But there's a couple of considerations that people, really miss. And again, this is one to consider when, if you're troubleshooting your trading and you're wondering, okay, so what's going on? Well, on systems, there are a couple of things that are really important for you to understand if you're, if this is an area where you're struggling, if you're having trouble, with your system, executing it consistently and comfortably and making money. Well, first thing you need to understand is that there's a huge difference between a strategy and a system. A lot of people are out there saying, they present them as the same, or they think about them as the same thing, and they're not. Your strategy is your underlying idea of how you're going to get in and out of the market. And, so maybe, it's like I'm going to follow the trend, or I'm going to pick tops and bottoms, or I'm going to use Elliott wave or Gann trading, or, pattern trading, or, trade off the news. That's your strategy. Your system is how you're going to do that repeatedly, hundreds or thousands of times over the foreseeable future. And a good idea, a good strategy does not necessarily equal a good system. Here's proof in the pudding. Say, okay, follow the trend. That's your strategy. Now, doing it thousands of times consistently, not so easy if all you say is, follow the trend. Get in at the beginning of the trend and get out when it's over. Or if, you say, I mean, if a strategy and a system, how you're going to do it thousands of times, were the same thing, all you'd ever need is buy low, sell high. Do that consistently and you'll make money. Well, the system is how you do it repeatedly, again, over hundreds or thousands of times. So a system and a strategy are not the same thing. Again, from a quality perspective, very important that you understand this. Quality is how you systemize strategies. That's one of the things that I teach. But again, just because somebody's presenting a clever strategy and they show you on one chart, we got in here and we got out here and look at all this money we made and you can do it too. Well, no, it's okay. How are we going to execute this? Again, hundreds or thousands of times. Another thing on systems and methods, real important to understand, is mechanical versus discretionary, or systematic versus discretionary. I prefer to say it. A lot of people, they'll jump into trading and they're like, well, I want to be a discretionary trader. Well, the thing is, discretionary trading can be cool, it can be fun, it can feed your ego a lot, but what I've found in my own experience and working with lots of traders is, until you've had months of successful, consistent experience, you're really gambling if you're going to the discretionary route. And here's why. Again, trading is a skill-based business. And with any skill, you have to have, that good practice, that successful practice to wire your body and your mind, your subconscious, especially because when you're looking at charts and you're making decisions, and especially again, if you're being discretionary, a lot of processing is going on subconsciously. And so you have to already have that success kind of wired into your subconscious to give you those good, consistent results. That's why a lot of traders have been successful for a lot of years. They can jump in and just kind of go by, off the seat of their pants, because they've already got the success wired into their subconscious. It comes automatically to them now to be able to make the right decisions and interpretations of what they're looking at. But until you've had that, say 6 months to a year of successful trading, you really need to stay with a systematic or a mechanical method to so that you can stay methodical and systematic about it. Because your subconscious hasn't been rewired to process things properly for you. And again, this is one that's just based on my own experience, a lot of experience working with a lot of traders on systems. This is really huge. So if you're trying to be a discretionary trader and you're having a tough time with it, you're fighting with your discipline, or bad decisions or inconsistent results, seriously, you want to be systematic and methodical. I mean, if you want consistent results, then you have to be methodical anyway. So next thing that's part of the method, or is your habits and routines. What are your practices? Do you have a good routine to start your day, so that you start every day in a consistent state of mind, and that's very positive and supporting? Or things kind of sloppy and just kind of random, and your habits and routines, how you start your day, how you go through your day, how you enter trades, and execute them, all that kind of stuff. These are your habits and routines, and that's part of your method, the things that you do that are going to affect the consistency and the quality of your output. So next thing is moving on to the materials. Okay, in manufacturing, of course, when we're making plastic beverage bottles, it's the resin, the plastic that we made with. But in trading, you've got your news, your signals, your tips, whatever it is that you're using as far as the raw material, so to speak, of your decision-making process. Then of course you also have your data from the markets. So regardless of how what decision-making method you employ, these are this is what we're taking in to evaluate and make decisions from. Now the next part of this whole input system is the environment and measurement. Now this is huge. Environment, of course, includes the markets themselves, the market mood, and but it also includes your trading environment, your trading room. Do you have a good trading environment that or have you structured your environment so that it's supportive and conducive to good trading and good consistent trading? When I have people telling me that they get triggered a lot by bad trades that have happened in the past, and they're nervous or hesitating about placing trades, and it's just kind of gotten habitual that now they're having trouble trading well and with any confidence. Part of that's a habitual thing caused by their environment. So one of the first things that I'll often tell people is, well, you need to provide yourself with a pattern interrupt of how things have been going. And one of the first things to do is go ahead and assess your trading environment. Do you have things in your environment, like on your desk or maybe your charts or in your trading room? Do you have your bills sitting next to your trading computer? Do you have CNBC playing in the background, or the news, and it's kind of triggering unsupportive thoughts, make you nervous or get you start guessing, second guessing things, or but any unsupportive items in your trading environment that need to be removed so that they don't trigger past memories or associations. The other thing about your environment, you also sometimes, again, what's needed is a pattern interrupt so that you change the stimulus that you provide, even just when you walk into your trading room. A lot of times I'll tell people, change the lighting in the room, change the colors on your charts, rearrange the room so that you're providing a pattern interrupt so that it doesn't feel the same and get you in that same detrimental state of mind. Change it up so that when you walk in, now we can break that old pattern and you can establish a new one. As far as management, and again, it's not just environment here. Management is the big thing with trading. Measurement is critical. Again, a lot of times I'll have traders come to me and they'll say, Brian, I can't seem to get good results. I'm not making money, and so I'll start asking them some questions. Have you run your metrics on your system? Do you know what what to expect in the first place? Like, well, what do you mean metrics? Like, do you know what your system should produce? Under reasonable normal circumstances, as far as do you know your expectancy or your average profit per trade to expect? Do you know what your average winner should be, what your average loser should be? Do you know what your winning percentage is for this system? And it goes system by system. Do you know what your profit to loss ratio is? Do you know your metrics? And if you're not measuring your trading, that's huge, because that's your feedback into is your system itself, is it adequate? Is it performing up to expectations? Are you going into your trading with the proper expectations? And the only way you're going to know that is if you've tested it and measured it, or maybe not tested it, but at the very least you've taken some of your trading that you've already performed and you measure it. Okay, what actually has it been producing beyond just the net profit that I've seen, and is it going good or bad? No, we want to actually measure it. Again, the whole quality perspective is we want to, we want success by design, very intentionally and from a knowing perspective. And really, the only way you're going to do that is you start with a good process, you define and document it properly, and then you measure it so that going in that yes, I can expect to make $150 per on average with every trade that I place, whether it's a winner or loser. That's what I'm going to average. And so, and I'm going to be placing so many trades every week and every month. So yeah, I know what to expect every month, what it should be. Is it always going to be exactly that? No, but I'm going into it and I know, because I've tested, I've measured this system so that I know, yeah, when, conditions are normal, this is what I should expect. And also in the measurement, the testing process, this is where you can find out, okay, in these environments, when the volatility is, below a certain amount, when things are relatively quiet, like normal summer months, not this year. But when the volatility is below a certain point, yeah, I can expect this kind of performance from my system. But when the volatility is above a certain level, no, this is what I can expect. So you identify the different circumstances or external factors that affect your trading system, and maybe employ a different system when the circumstances change. So that measurement is how you know when to use your system and when to sit on the sidelines or get a different system that's suitable for those conditions. So the measurement part of it is huge. And of course, you want to be measuring things and tracking them as you go, so that if you see a drop in performance, instead of just, you're only seeing a drop in profits, or, maybe not as many winners, more losers than you usually see, you actually have a measurement, because the metrics you can also use to go in and, it directs you where to look to, take action to fix things. So, these two right here, your environment, your trading environment, and understanding the markets, that's an environment by itself, and you can't control that environment, but you can monitor it and respond to it appropriately. And that's part of the environment and measurement that are part of your management of your day-to-day and monthly, ongoing long-term trading management. And the other part of managing your trading, of course, is to, again, have a long-term plan. When you get into trading, again, you were the business investor. Did you take the time to say, well, this is how much I'm willing to invest, this is how much I expect to make, this is the time frame in which I've decided is reasonable that I want to get my initial investment back, and I can take it out, and then it's it's self-funding beyond that point, or at least I want to know by plan that, okay, it's going to take me a little bit of time to get things figured out and up and running smoothly and all that kind of stuff. Okay, so I'm going to allow 3 months or 6 months or whatever, for the startup phase. But at the end of that period, things should be there, or at least close. One big mistake that a lot of traders make is they don't pay attention to, patience versus impatience. They're both necessary in your trading. Having the patience to say, all right, it's going to take me a little bit of time to, learn and establish everything that I need to, it's not, next week I'm going to have a fully mature trading operation. It's going to take a little bit of time. So, okay, I have to be patient and allow that time. Maybe it's going to take a certain amount of time for me to test out, the system that I want to, move forward with. So you have to allow the time for that, and also some time for, maybe it doesn't work. It doesn't work exactly as expected at first, so I might have to pivot here and there, back and forth, make some changes, maybe switch to a different system if that doesn't work out. So figuring out what works and what doesn't, I need to allow time for that. So that's the patience part of it. But you also have to have a certain amount of impatience. One of the big mistakes that a lot of traders make is they'll get going. Try this, it doesn't work. They try that, it doesn't work. And after a while, they're just kind of, plodding along. Things aren't going well. They're just kind of coasting. And you have to understand, how long, or maybe, they're staying after, I'm jumping from this system to that system and that system and that system. Okay, how long do you continue with that strategy when you say, hey, wait a minute, this approach isn't working, and I've given it enough time, now I need to step back and reassess. Again, you got to, you have patience to allow for the things that need to happen, let them happen. But you also need to know when it's time to say, hey, it's not working. We need to stop and reassess, maybe change direction, try a different approach. Maybe this particular mentor I've been following, he's doing well, but I just don't get it, and it doesn't work for me, so I need to go try something else. Maybe, and this is a big change for a lot of traders. Instead of trying to be a self-directed trader and do everything all by yourself and be the loner, you say, well, all right, I'm going to go find me a good mentor, that I can, he'll share his trades with me, and he'll teach me to trade, but I can follow him. Or maybe, you get a good signal service, and you say, all right, I'm going to rely on somebody else's expertise. I understand I don't have quite the autonomy and independence that if I was doing everything myself, But instead of looking to somebody who's not a successful trader yet, I can go find a successful trader and tap into their experience and expertise, and instead of relying on my own. Now I understand going into it, I need to, before I risk money, I need to go through a period, follow them, measure their system and the results, make sure that it matches up with what I want, and it actually is producing before I risk money with it. And test things out, make sure that it does work and it's okay for me. And yeah, understand, yeah, you're dependent on them, but that's okay. As long as you're aware of it and you understand the pros and cons of it, that's fine. So, your overall strategy, you can go it alone, you can look for the resources of others. You can change your trading, strategy in general, your style, what you trade, all that kind of stuff. One of the great things about trading as a business is you can pivot in a big way anytime you want. You can take a break anytime you want, and come back to it. You can take a break for 2 months and come back to trading in the markets and miss you like you never left. Other businesses, you take a break from, you walk away from it for 2 months and you come back, your business is probably gone. Trading, no, you can take a break anytime you want for however long you want. So, but it really is, it's a business, and you really do need to plan it and manage it and track things as you go, as you would in any other business. The management of your trading, that's one area that is so neglected. I see a lot of traders, they're just sitting there, they're doing their daily trading, and it's, did I make money today? No, rats. Yay, made money today, yay. And it's kind of just the emotional daily or weekly roller coaster. And they're not looking at it from a long-term perspective. Like I said, if you're in this for the long term, you need to always step back and say, from a long-term perspective, I'm going to be doing this for another year, or 5 years, or the rest of my life. And so I can't get all bunched up about today. I'm in it for the long game, and it is a business. Now, as far as one of my favorite questions, let me just kind of move on ahead here. But anyway, this is the Ishikawa diagram, the trading process. And whenever you're struggling with profit or loss, or consistency of profit or loss, or just plain enough, these are the areas to look to see, okay, where, which of these inputs is lacking. A lot of times it'll be in training and skills. Sometimes it's an attitude and mindset. The attitude and mindset, the psychological stuff, the hesitation, the jumpiness, chasing trades, that causes hesitation or issues, habits and routines, or do you have a good system, or is it just a good idea for a system? It's a good strategy, but it's a lousy system, and you're trying to follow a lousy system. A lot of traders are working with systems that are, they call it a system, but it's not a good system, and that's really why they're struggling. Is because it sounds good, but in being able to execute it effectively and consistently, it's not a good system. And that's why I teach, in the trading system mastery course that I have, I teach, the first thing is, a qualitative evaluation of a trading system. Is it going to be functional? Are there gaps? Are there holes? Are there gray areas where it's confusing or inconsistent? Things are always wonderful when you're looking at one chart and you can see ahead in time, but your system is, that's what you're using when you're live in the moment. And it has to be clear, and it has to be a good system. Again, trading is a decision-making process, and your system is your guide. It's your procedure. If you're working with a subpar or a poor procedure, it's going to be tough to be consistent and get consistent results with it. So again, that's a big area. Is your system up to snuff? It might be a clever strategy, yay, but is it a good system where you can do it over and over again? Again, the training and the skills. That's knowing, is it a good system? How to fix it if it's not working. And when you get skilled up and you get good at these things, that helps with the confidence and the mindset and the attitude. Again, when you've gotten the training, so yeah, what you're doing, you got a good handle on it all, that's a big deal. Now, one of my favorite questions to ask people when they come to me is, have you ever started to run your own business successfully before trading? And the thing is, the answer tells me a lot about where you are right now mentally. It really is. Because the entrepreneur, they get trading is a business. Really, if you think about it, anything you do on a regular basis for profit is a business. And if you're placing one trade per day, every trading day, that's 252 trades per year. Over years, yeah, so it's going to be hundreds and thousands of trades. And you need to understand this. And if you don't get organized about it and treat it properly, I mean, hope is chance. It really is. You know, if you're going without a plan, you're going on hope, and hope means going on chance because you're not dealing with knowns. Planning and preparation. It's how you take all the unknowns and you make them knowns, or at least somewhat knowns. If you don't have a plan, if you haven't thought things through ahead, if you haven't measured your stuff, you're going on hope. And that's chance. And when you're going on chance, that's when you're really gambling and you don't have any control over what you're doing. That's why it's important that you look at trading as a process, a business process, and all the things that go into any individual trade. Now, as far as how you look at your trading, I mean, you need to understand, yes, you should too. You need to understand, yes, you're the investor in your trading business. And business investors, lenders, and venture capitalists all absolutely insist on a business plan. And you should too, because you are the investor. You're the one that has your money at risk with your trading operation. And without a plan, if you go to a VC or business investor, if you don't have a trading plan, you won't get the time of day from them, let alone any money, because they know that without a plan, your odds go right down the toilet. And as the business investor in your trading operation, you should insist on one too. I mean, because what the plan does for you, it provides direction, provides focus, gives you a lot of security when you have a well thought through plan and it's properly structured and organized. It's a good plan, provides clarity. And one of the big things is its efficiency and speed. Getting to that mature, the fastest way to get there. It provides that efficiency and, yes, again, speed. And one of the best aspects about it is the plan takes the uncertainty out of things, especially the when. When am I going to get there? By having a proper plan, you have an idea of a realistic idea of when to be expecting. Yeah, I should be making this much money by this time. Without a plan, you might just be struggling on along for months and months and months. Slip by, and you're like, wow, 2 years are going by, and I'm still not making any money. Well, I should have stopped, 6 months in and said, hey, things aren't working. Again, this is where a plan really helps you. And again, going back to mindset, the thing about big mindset, you got entrepreneurs and you got opportunity seekers. An opportunity seeker thinks that, they can just grab any trading system that looks good, start throwing money at the markets, thinking very short term, and that somehow magically, once they start making money, that, hey, everything else is fine. And you're going to make money next month, especially if you're just kind of going along, by chance and by feel, jumping around a lot. What an entrepreneurial trader really gets, what they understand, is that in a leveraged, ever-changing, and often uncertain environment like trading, there are just way too many variables and way too many ways to lose money, and to lose money very quickly, to go in unprepared. And so that's why the plan is just huge. I mean, they understand that by attending to the realities of trading, by showing the profession the respect it deserves, by properly preparing through planning and training, only then do they have a realistic chance of success. And this is why you have a need for complete training. I mean, most trader training focuses almost solely on just, here's my method, learn this method, and everything's magic. No, there's more to it than that. A lot of traders, they'll focus either just solely on a method, or maybe, a little bit of psychology and money management on the side. But these things, these are part of what you need, but they don't really prepare you. Some real money, you really do need to treat it as a proper business. Now, a real valuable understanding. I love this phrase from Jim Rohn. Don't wish that it were easier, wish that you were better. Now, when I first heard this, I was like, huh. But the thing is, there's really some excellent wisdom that he's sharing here. And that is, difficulty is relative. Remember I was saying that most traders, they don't have psychological issues, they have lack of training issues. Well, yeah, if you're trying to do something and you don't have the full skill set for it, you haven't been shown, here's how you do this, here's the process for doing that, here's how you fix this, here's how you evaluate that. It's going to be, unpleasant, it's going to be stressful, it's going to be emotional. But when you get better, when you get your skills up, you invest in yourself, you focus on developing yourself as a trader, questions that I ask people when they come to me, as far as your training to be a trader, did it teach you, how to approach trading as a business investor? How to ensure that your big picture plans for your trading aligns with your personal goals? How to choose your business model or general strategy for your trading. There's 100 different ways to trade as far as general approaches or business models, general strategies. Picking the right one, or there's always usually more than one right answer. So it's picking one that works for you instead of just jumping in because it sounds like it's going to make money. And again, your training as a business owner, did it include how to manage your business as a startup, how to create a proper business plan, how to construct a working and realistic financial forecast so that you can see how your long-term assets going to actually come into reality. And about your trading system skills. Did your training include how to perform a qualitative analysis of a trading system? How to properly confirm the performance of a trading system properly, so that before you go risking money, you can, actually, get a measure of it. Confirm that, okay, I can have these expectations that, with this size account, with this kind of trading activity, I can expect this kind of, profit or, net income from the system. Huge, and it's one of the skills that most traders are not taught. They're just taught use this method. Step one, step two, placing trades, but they're not taught. Okay, how do I evaluate trading system? Training, did it include, how performing well? These are huge skills, and if until you learn these skills, trading's going to be dicey. It's going to have its stress points because these are things you need to know. If you don't know them, then you're sitting there going, I hope things are going to work. I'll have to try maybe take hard lumps to find out, if it does or doesn't, or you have to risk real money to find out. And it's just really critical, again, trading is a skill-based business. If we go back to the overall process, and this is why I say, this is really the 5 keys. This is the proven formula. If you pay attention to these inputs to your process, both on an individual day-to-day trade by trade basis, but mostly from a big picture standpoint. Because again, you're in this for the long haul. You don't want your trading just to make money today. You want more than that. You want to okay for the month. You're okay for the foreseeable future. That you trade. It doesn't matter what's going on, and you can go trade and be okay. Know that you're going to make money. Different things that go into it, and if you attend to these, it almost ensures that your trading process will produce the output that you desire, which is good profits on a consistent basis and minimum losses. So this really, I hope this has been helpful, because this is a tool that's used in quality. It's been, again, used in probably every industry on the planet, and it is effective because this is a cause and effect diagram. This is where you categorize the inputs, that produce the output for. And if you stay mindful of this, you're not getting the profits or losses. Okay, am I measuring and tracking things as they go? Do I have good data, and as far as my source of information for making my decisions? That's not usually a problem. That one's pretty sorted out pretty quickly. Charts and indicators. Indicators, that's one where, okay, maybe you need to look at it. Do I have too many indicators? Again, coming back to measurement and testing, what's going to work as far as my tools and my methods. Do I have healthy habits and routines? Am I starting every day ready in a good solid frame of mind, and it's consistent? Do I have a grounding process, again, a habit and a routine or a ritual, so that I get in a good frame of mind to start my trading day that's conducive to good trading? Am I bringing the right attitude and mindset and the skills? Have I gotten the sufficient training? If I haven't, where do I feel uncomfortable? Where do I feel like I don't really know what I'm doing? And seek out the training. So I hope this has been helpful. I really do. This is the general thing. These are the 5 keys, the 5 inputs that produce your trading profits. And I told you that I had a gift for you, the trading performance or Trading Psychology's missing chapter, you can go to this link right here, insideouttrading.com /free-TPMC, Trading Psychology's missing chapter, and you can get access to it there. And if you've got some questions, if you see something here and you'd like to talk about your situation with your trading, you can book a free 30-minute call with me. Just go to this link here, calendly.com /Brian Mack, that's me. And 30-minute call with Brian, just grab this link and I'll go ahead and put it in the chat box here. I appreciate everybody coming today, and I wish you well. If you want to come by insideouttrading.com, that's the site where you can find me. And again, if you have any questions, you want to talk about your trading, so we can figure out how to resolve what's holding you back, go ahead and book a call with me. It's free. It's a 30-minute consultation. It's not a sales call. I'll help you as best I can in the 30 minutes. If you want to work with me afterwards, you decide to want to hire me, great. If not, that's fine too. I'm just here to help you, and actually make it in your trading and avoid the anguish.
Yeah, I'm going to be sharing about candlesticks and how candlesticks could help people get through this really volatile, choppy market that we've been experiencing recently, and basically just help people stay on the right side of the market pretty much.
Sounds exciting. I will get back to you at 10:15 Pacific.
All right, sounds good. Sounds good. All right, guys. Well, thank you so much and welcome. I appreciate you guys, Anna, for having me come on board again. I've been on this before, and I really hope that what I share with you guys today would help. Let's just go ahead and get started. We don't have that much time, so I'm just going to go ahead. First and foremost, please understand that there is risk. This is our risk disclosure statement, saying that this is for educational purposes only. This is not a recommendation to buy, sell, or anything. We only have 45 minutes, and truth be told, there's a lot to share, but I won't be able to do all that in that 45 minutes. So my plan is to just show you guys a few things, a few concepts in regards to candlesticks and what I consider to be the modern candlestick. Candlesticks is something that a lot of people have heard of many, many times, but I always ask myself, if people really understood candlesticks, then they would see how much information is packed into it. And unfortunately, people are not using it like they could be using it or should be using it, maximizing it. And so today I'm going to share one candlesticks. You might have heard of it, you might not have heard of it, but we'll see. This candlestick is literally what helped us with time in the market, and we use this over and over and over. And in particular, this one helps us to spot bottoms. And so most people don't know. If I was asked what candlestick tells you when the market is ready to crash, they can tell you that. I mean, they group a bunch of candlesticks, but there's a few that really tell you market is ready to crash, and there's a few that really tells you, hey, wait a second, we have hit bottom. And candlesticks have a unique way of telling you things, and my goal is to share at least one of those with you today, and see that maybe hopefully that would help you. All right. So we're going to talk about the bottoming pattern in candlesticks. Like I said, that is our goal for today. But before we do that, I like to ask this question: is the stock market random? And the reason why I ask that is because I hear a lot of people, and I see a lot of social media posts, YouTube posts of people saying everything is random, nothing is predictable. It's a total gamble, which is one of my pet peeves when people say the stock market is gambling. Okay, and I still have people that argue with me about that. But to each his own. I don't see it that way. And so I asked the question, is the stock market random? Because randomness, if anybody's gone back and looked at the definition of randomness is the lack of patterns. Because it's the lack of patterns, the lack of recognizing patterns is what randomness is all about. And so what I hope to show you here today is, there's a lot of patterns when it comes to the stock market. And the problem is a lot of people don't know what type of pattern to pay attention to. Now, the reason why we call our company right side trading is because, look, anybody can go in the past and say, look, if you have bought down here, or if you have bought down here or down here in the past, oh my goodness, you would have made a lot of money. Okay. The question is, when we are here, the furthest to the right side of the chart, and we have to anticipate whether the market is going to go up, go sideways, or going to go down. That is where we make our true money. And so my thing is it possible to anticipate based on data that we see from candlesticks, to see what the market is ready to do, to anticipate what the market is ready to do. And that is what we call right side trading, because everything on the right has yet to occur, but we can look at the very furthest to the right and say, hey, wait a second, based on what I'm seeing here, we have a very good idea of what the market is trying to do and what is communicating to us. So that is what we're going to be doing today. So a little bit about myself. I am the Chief Technical Strategist over here at Right Side Trading. I've been in an accounting and finance investing background for over 17 years. Specifically for the last 8 years, I've been focusing primarily on technical analysis in the stock market. We specialize in identifying companies that are sound. We're not looking for weak companies. We're not looking for companies that have dropped massively, like 80–90% to be bottom fishers. That's not what we're looking for. But we're looking for sound companies that we can get at discounted prices, attractive prices, with minimal risk, and has huge potential for capital appreciation. That's what we focus on, sound companies that are at a discount. And there's a big difference between a stock that is at a discount and a stock that is very cheap, okay? Stocks that are cheap end up going into bankruptcies or going out of business, but discounted companies know when a stock is being offered at a discount, where that will probably be the lowest price you'll find over the next 5–10 years. It's very important. And that's what we specialize in, as opposed to just saying, oh, let's find a $1 stock because the stock has gone all the way down to $1. So we spent a lot of our studies and research on focusing on price pattern movements, again, specifically in the equities market. We do look at IPO stocks, we look at dividend stocks, as well as what is going on, the patterns that are going on around certain stocks during earnings seasons and different microcycles and stuff like that. So our whole thing is to find patterns, train our eyes to see patterns. And so for that reason, I have a statement or a quote that I go by, and I say, people get excited about stocks that have made huge moves. Take, for instance, this quarter, 2020, second quarter. Now everybody talks about how the market was one of the best quarters in over 2 decades, right? But the true credit, in my opinion, goes to those who trained their eyes to see the setup back in March and early April. And back in March and early April, when we were telling people, hey, we see the same patterns that said we bottomed out, a lot of people had a hard time believing that. And unfortunately, even some people shorted the market and just kept on shorting the market, not realizing that we had already set a bottom. And so I'm going to show you here with proof some of the things that we saw that said, wait a second, this is a bottom. The same patterns that we've seen are beginning to show up again. And people were upset. It's funny because at first it was denial, and then the denial that we've hit bottom because of how bad everything was going on turned into frustration and finger pointing and blaming the Feds for manipulating the market. And that's kind of like the cycle that you see, is because people don't train their eyes to see the setup, and because they don't know the setup, doubt leads to frustration, frustration leads to finger pointing and blaming, and then people give up hope and then call it gambling. But it's really not, if you understand what to look for. So here's what I'm going to do. Again, we don't have that much time. So first I want to do is, I haven't done this before. I'm just going to show you my offer, because I'm going to be having a webinar coming up on Tuesday, next week, Tuesday, after the 4th of July. Happy 4th of July to everybody, by the way. So let me tell you really quick about that so we can get the big elephant out of the room. It's $299. I'm going to show you some of the things you're going to learn at this workshop that I'm going to be putting together on Tuesday. So consider this like the preview. You will learn. I mean, you will walk away after today. You will still walk away with, solid information that you can literally go out there and implement starting, next week, whether you come to this workshop or not. But I'm letting you know, just this is a taste of what you're going to learn. We're going to go into more details on that Tuesday night. It's at 7 p.m. If you can attend live, it's going to be recorded. The price is $299. So anybody who's thinking, okay, what is it that you have to offer at the end? Let's get that out of the way so you can actually focus on what I'm about to show you and teach you here today. Okay, and then if you like it after it's done, you'll see the link towards the end and you can join. But $299 for what you're about to learn. I'm pretty sure $300 is not that much more than what some people have lost, whether physically in the market or just by sitting on the sideline and missed out on. So for $300 to come to a live webinar, learn how to see these modern candlestick that works in this present day and age. I think that's a really good offer. So let's go ahead and talk about this. Now, how many people can relate? We just talked about this. There's a big disconnect with the stock market and the economy. There are people that literally felt that way. Okay, I saw it, I've heard it multiple times, and it's just one of those things where it's just like, you know what, it doesn't have to be that way. Okay, I heard a lot of people say fundamentals doesn't work. Hey, trader, welcome, sir. I've heard people say, fundamentals doesn't work, technical analysis doesn't work, but that's not true. If there was anything, the one thing I noticed that worked through all this chaotic market, or what people call chaotic market last quarter, was the fact that technical analysis was the only thing that worked. Okay, all right, so let's do this. Here is a report that I write about, and I'm showing you, I'm sharing this because I want you guys to see that before the crash took place, before this coronavirus crash took place, we saw patterns that told us the market was about to crash, or at least was ready to go down. And so I have a report that I send out every week. And in that report, you can see right here that this is showing the 24th of January 2020. So this is before the market started collapsing. And if you were to watch this, replay and pause this, you can see the stuff that I highlighted. But I just made it easy for everybody so they can see right here. Part of an excerpt of that was, we said we will be discussing the major indices, which is telling us that we should be prepared for a drop. Now, truth be told, we did not know it was going to be as bad as this coronavirus bear market. But the fact is, we saw the warning signs that says the market was going to drop. Not only did we see the warning signs that the market was going to drop, but also that the VIX was beginning to shape up with spikes in volatility. Now, most people that go back now will see that the VIX did, spike up to about 80 on the VIX. But this is way before. You can go back and take a look at the chart, and you see way before it got up there, we were already beginning to see, wait a second, something is not right. And this is what I mean by the market is not random. There were patterns that we began seeing as early as January 24th that said, wait a minute, something is wrong. So in that same report, later on in that report, here's another excerpt of that. We mentioned that because this market is in unison, meaning everything we're saying, we're communicating the same thing, that get ready for a drop in the market. And that's all they told us. It just said, get ready for a drop in the market. It didn't tell us how bad it was going to get, but just get ready for a drop in the market. And then it says, we expect the uptrend to come to an end, which was the uptrend we were seeing up until January. And it says, we need to be ready for either a slowdown at best. And so based on this patterns that we see, the market is going to slow down. That's without a question. But it could lead to a huge reversal, is what we also saw. It says, look, the writing is already on the wall. Excuse me. That the writing is already on the wall. It is time to take profits, exit your position. The market is warning us to take heed. Now, interesting was that we were very specific about, this wasn't where it's like, okay, yeah, maybe it's going to go up, or maybe it's going to go down, or anything like that. We weren't hedging ourselves. These were like very bold statements because the patterns that we saw were so huge, right? And then what ended up happening was the market dropped, and then it got really, really bad. We all now know what has happened since then. And then March came, okay? And in March, in our report in March, after seeing how the market had been dropping, you can see the date right here, March 23rd. Okay, so March 27th, I mean, that was that Friday, but we started seeing the sign as early as March 23rd. So when the report came out on March 27th, here was one of the things that we wrote in there. Here's a report again, and we said, look, the question everybody have right now is, have we hit the bottom, or is this just a relief rally? Because we had a pretty good rally that week. Right? And people's like, well, is that a relief rally? And interesting enough, so many people were saying, oh, it's just a bear market rally. It's just a bear market rally. It's going to come back down. Get ready for the second wave. Get ready for the second wave. That's what everybody had been saying. But we said is, look, just like we saw on the bearish signals that warned us of a bearish drop, this time the market is communicating that it is time to do what? Cover all short positions, not some. Not let's wait and see. It says, look, the patterns are so clear. We need to cover all our short positions. We need to exit any short positions that we have and then do what? Get ready for a rally. Now, why would we be so bold on the 24th of January and say, look, it is definitely happening. And then March, when everybody, the economy hadn't even started opening back up, we was like, wow, the market is ready to go back up. And then now we see that everybody's saying, wow, investors are shocked. How could this have happened? Well, I'll tell you, technical analysis was telling people what the institutions were doing, but people had a hard time believing it, and then they didn't see what happened. So there are certain things that the market will show you. So let me show you one of the things that told us that, hey, wait a second, get ready for a bottom. Some things that can tell you, get ready for a bottom. The candlestick signal that I'm going to talk about today, which is something we'll go into more details on Tuesday night, and we'll share more candlesticks as well, very specific candlesticks as well, is this candlestick called what we call bottoms up. Now, I'm not sure what the official name is, if there is an official name for it. Some people will confuse this with a piercing candle. This is not a piercing candle, so please do not confuse this with a piercing candle, okay? There's a difference. I'm not going to go into the difference between it, but believe me when I say it is not a piercing candle. It looks like a piercing candle, but it's not. There's a slight difference between that and a piercing candle. This right here is what we call bottoms up. And very simply, all we do is look at the bodies. We ignore all the wicks. The biggest thing we want to do is make sure that the bottom of this green is below the bottom of the red. And the top of this green is below the top of this body's red. Notice again, no wicks. Okay, no wicks whatsoever. That's all we're looking for. The bottom of this is below the bottom of that. The top of this green candle is below the top of the red. Whenever you see that, especially after a humongous downtrend, and then you all of a sudden see this is a signal that tells us, get ready. The market has put in a bottom. The market has put in a bottom. So let's go to the charts and see some examples of this. So what I'm going to do is show you, this is the same candlestick signal right here, okay? And this ended up forming at the end of April. By the end of April, even if you didn't catch the March absolute bottom, which we call it, but even if you didn't catch that, by the end of April, the market had clearly told us, get ready, we've put in the bottom. The same pattern that you see here is exactly the same pattern that you see back here, okay? Now, again, notice we ignore the wicks. We see the exact same pattern back here, which is when we had that October-November drop in 2008. If anybody recalls that, I remember a lot of people saying they made so much money from the beginning of the year, and then October, November, December, they literally lost everything. And I can understand that because I think the beginning of the year started here, and they were doing well, and then boom, this happened right here. And they lost so much money by the end of, but what they were not aware of was this bottoms up. When the market put in the bottoms up right here, that was a pattern that said, hey, we put in the bottom, and what ended up happening, market went higher. If most people recall 2019, people say, wow, 2019 was one of the best years in over a long period of time, okay? And all that started with this bottoms up. Now, was that coincidence or not? Well, let's take a look. Let's go back to the financial crisis, okay? When we had the financial crisis of 2008, we had this big steep drop that we see right here. Well, guess what? I didn't even know. I was in real estate back in 2008, never experienced a market like this before, but look at what we saw down here. Now, I say look at what we saw. I wasn't doing this back then because, again, I was in real estate. I was nowhere. I didn't even know the difference between a bull market or bear market then. Long story short is the fact that we saw the same pattern appear at the bottom of 2009. Everybody says March 2009 was the bottom. Now, I didn't even know we were out of a recession until 2013. That's how naive I was and how out of the picture I was when it came to the stock market, okay? Because I didn't really start trading in the stock market until 2012. But all this time when the market started rallying up and people were saying, no, it's not gonna work, the stimulus plan, it's all being propped up, what ended up happening was technical analysis using this one pattern, has said, no, that is the bottom. We've put in the bottom, expect market to rally. We find out later on that it was one of the biggest bull market in history, but it all started with the same pattern. And this is why I say the stock market is not random. The problem is most people did not want to see this. Most people believed in other information and were worried about the news that was coming out, not realizing that, wait a second, the pattern right before this market goes up, or whenever we see a pattern like this kind of tells us institutions are serious about making the market go higher. All right, well, maybe that was a coincidence. Let's go back in time again. Let's go to 2000, the dot-com crash. We had this huge dot-com crash. This one lasted a very long time. Ladies and gentlemen, right over here was the bottoms up pattern again, okay? Notice what happened was that we had the bottoms up. Yes, it went up. It actually pulled back, but did we pass that bottom from that point on? No, we didn't, okay? Now, I was in college during that time, so I didn't even know anything about the market whatsoever. But we all have heard, some people have experienced this, some people have heard about it, but we all heard about this dot-com crash, right? And right there when it ended in 2002, 2003, if people were known and paid attention to this pattern right here, it was the same pattern that worked in 2000s, and you could even go all the way back to 1950s, the same pattern. You can see it over and over and over again, that when we hit bottom and this pattern shows up, it's a very, very high probability that that is the bottom that you're going to see for a very long time, okay? And so now that we've now seen this again, this is where I was telling all our subscribers, I said, don't you dare even think about shorting the market. Don't even think about shorting the market and just stay long. I said, we're gonna have volatility, that's fine. But look, every time we have those pullback, anytime you hear a big drop in the market, that is your opportunity to start buying rather than sell it. People didn't believe it. And then now it's like, wow, they texting me, emailing me back, calling me saying, wow, my goodness, I'm up triple digits on stocks, not even options. The guys that trade the options doing even phenomenally more well, but just even on stocks that they bought simply because they caught the bottom. And I think the beauty of all this is like, wow, they are beginning to see it. And despite all the media and coverage about the economy and all this stuff, they just simply focus on the patterns that told them this market is ready to go higher. We'll go back to stocks. I'm gonna show a few examples of stocks. Here's Apple on the monthly chart of Apple. Same exact thing took place right there. Right before Apple has now everybody. It's so funny because everybody wants to get into a stock when? After it has hit all-time highs. And this is why I say everybody likes talking about the stocks that have made the big move. But the true credit goes to who? The people who saw this down here and said, wait a second, Apple was showing a bottoms up pattern. Everybody wants to jump into Apple now. Everybody wants to jump into Tesla now. They want to jump into all these big Zoom and all that stuff. But they didn't see those patterns when the patterns were first showing up, okay? Here is a company called Restoration Hardware. A lot of people, talk about Warren Buffett and, the trades that he did with a lot of these airline stocks that didn't do so well. But not too many people are talking about stocks like this that he's also in. I mean, I only even heard about this stock because I heard that he had, purchased some shares in this stock. But look at this, guys. That's the bottoms up pattern right here. Stock made all-time highs. Okay, most people are not talking about stocks like this that he's in that is making him a lot of money. Yeah, everybody likes to talk about the airlines that he lost money on. But the fact of the matter is he's in other stocks that are doing well as well. But at the end of the day, look, the same exact pattern showing up right there over and over and over that tells you, hey, when this coronavirus was happening, this was the coronavirus right here. When this was happening, it was saying, we've hit bottom, start buying. So what if you never got in at the absolute bottom? And this is why I say we don't bottom fish. So what if you did not get in down here at $72? How many people would be happy even if they got this at 152? Well, how many people would even be happy even if they bought it at 184, knowing that, wait a second, I can buy this, knowing the information that I need to know, the nuances about these type of trades. I can buy the stock knowing that it's just put in the bottom and saying, look, this thing can go probably even higher. The only problem is we don't know how high it's going to go, But the one thing we know is, wow, it has set a bottom, because that's what this candlestick in particular, no other candlestick tells you that but this candlestick. And that's why I said, there's hundreds of candlesticks out there. It's important to understand which ones matter. Okay. Here's Neo, the electric company that everybody's talking about right now. Well, same thing. Bottom some candle right here. Boom. Everybody wants to talk about electric cars now, but those signs were there if we had paid attention to this. This is the weekly chart of the SPX, so you don't think it's just on the monthly chart and the big time frame. You can do this on any time frame. This is that bottom of the October, November, December drop that we saw in 2018. So I just want to, again, there's so much more to this, but because of time, I don't have so much time to go into everything. That's why when you come to the webinar on Tuesday night, I will go into more detail. We'll spend as much time as we need to. I will show you things, the nuances about it, when it works, when it doesn't work, the best times to use it, when not to use it. And right now, we're just talking about the bottoms. In that workshop, I'll also talk about the tops, how you can tell which are the tops that are going to crash, and how to tell you, wait a second, this is going to be a strong trend. Like, wouldn't you like to know when to get into trends that are strong as opposed to trends that are like, okay, they seemed that they were going to start strong, but then they fell off and got weak, especially those who trade options. Once you're able to tell the difference between trends that are like, wow, these are, this looks like a trend that has a solid setup, the pattern. Again, that's the thing. It's about pattern recognition, guys. People ask me like, well, why is it patterns? Let's think about it this way. When you think about who is actually trading, whether it's algorithms, whether it's high frequency trading, whether it's computers, or whether it's institutions, okay, even the algorithms and the high frequency trading, it's humans that programs these algorithms, okay? And what they program in, if anybody doesn't believe what they program in this algorithm, is patterns. Is that when you see this, act like this. When you see that, act like that. And so because of that, when people say, oh, you can't compete against algorithms, why are you even trying to compete against algorithms? The point is they see certain patterns and that's when they start buying. They will not buy if certain patterns doesn't show up. And so when they see certain patterns, the beauty of what we regular folks can do is we can see certain patterns that show up. It's like, wow, every time this pattern shows up, there's an opportunity in the market. And once you understand what that pattern is, it's like, wow, I'm going to take my chances. The beauty of it is we'll show you when the pattern is saying something is wrong. We'll show you when to say, hey, wait a second, this is not, it looks like a pattern, but there's something wrong with it. So let's be cautious, okay? And being able to see all those things is what helps you stay on the right side of your trades. Does that make sense? PayPal. Everybody likes talking about PayPal. Ladies and gentlemen, it wasn't too long ago, literally like less than 10 weeks ago when this happened. Say the same thing, say, wow, we have this. We are in these stocks that I'm showing you are all stocks that we are in, and we all traded because we saw this down here. And when everybody was saying, no, short the market, second wave, now they come back and say, oh, technology stocks did really well. Well, guess what? They were the ones that were showing these patterns back when we saw them and we started loading up on them. And then here's a daily chart, one of the most recent ones where we see on the daily chart, just so you can see. The SPX, same thing, or the SPY, that was the pattern right here. Anybody goes back, this was in May, and I think it was about May 14, when we saw that pattern, it's like, oh my gosh. And then even on the daily chart, the market is ready to go higher, okay? And this happened in the month of May. So knowing and seeing these bottoms up pattern, again, just one pattern that kind of lets you know, hey, we've put in a bottom, how to trade around it, when to take action, all that stuff really matters. Here's what somebody says, look, Wally, I have studied candlesticks to some extent, but your teachers really put rhyme to reason. I can tell you're born to be a teacher. You have found the answer far more than I could learn on my own. Here's what somebody else said. Hey, look, everything that's happening in the market right now, I saw it coming last week because of your VIX video, okay? And so again, the VIX video is something that I also teach people how to see when volatility is beginning to build up. So, how would you like it? Everybody keeps on talking about volatile. Well, it's really not as volatile as much as most people make it seem if you know when volatility is really truly spiking, okay? And then when you're on the side of volatility, then it's like, yeah, there's volatility, but it's working in your favor. And that's the whole point of making sure that you are on the right side of these trades. And so it's important to see that. And I share and teach people how to see not just, you know, stocks getting ready to go up or markets getting ready to go up, but even when volatility is ready to go up and when volatility is ready to come down, to let us know, wait a second, market is ready to do something. So here's what I'm going to do. Let me talk about this offer just a little bit more. Again, it's $299. I've already told you, but I'm going to show you more of what you're going to get by coming to this webinar. And again, it's on Tuesday night, 7 p.m. You can go to the link right here, rightside.trading.com/expo. By the way, if you have any questions, you can post those questions in here. I'll answer questions for the remainder of the time that I have. And but Tuesday night, 7 p.m., we're going to talk about these bottom candlesticks is what we're going to do. Okay. And like I said, this workshop would typically cost $997. The expo price is $299. So keep that in mind. Let me tell you something else that you're going to get. For those who end up coming in, okay, it's bottoms up, stronger than engulfing signal is what I'm hearing. It's two different things, okay? It's two different things. The functions are completely different, okay? So what a bullish engulfing signal tells you is different from what a bottoms up candle tells you, okay? And so the better question to ask trader would be, say, what market conditions when we see bottoms up do we want to trade? All right, and that's more of what it is, because depending on certain market conditions and when we see these bottoms up, it's important, and this is why I said the nuances of it. It's important to say, hey, wait a second, this is a time I would really want to trade a bottoms up. And then there's times when you see bottoms up and say, hey, this is not as important right now because of what I'm seeing going on. Does that make sense? But again, these are things that you have to learn how to do. So the Magenta software is a software where we now have taken a lot of this technical analysis and just had the computer do it for you. So you don't have to be sitting down there trying to figure out whether you should, what is this telling you? What is this not telling you? So what I'm going to do is, for those who actually come to this webinar, I'm going to give you access to the Magenta software at no additional cost for the next 90 days. You can test out the software for the next 90 days, absolutely at no cost, other than just joining us on Tuesday night for the webinar. But the beauty of the Magenta software now, I'll show you what the Magenta software can do. But the beauty about the Magenta software is it allows you to see what the true trend condition is, whether it's bullish or bearish. So if there's anybody that was shorting this market while the market was going higher and higher and higher, well, once you have Magenta helps you see this, like, wait a second, this is a market that is bullish, you shouldn't be really shorting, okay? And when the market turns bearish, it would also show you that and say, hey, you don't want to be going long in a bear market. Just understanding what side should you be on, okay? Because I can't tell you how many people, I see videos every day, just even this past Friday, we had a drop in the market. People like, oh my gosh, the second wave is here. People on YouTube coming out, see, we told you it's coming. We told you it's coming. I said, don't you dare short the market. I said, if anything, the market is ready to go up because it's still bullish. Understanding when we have bullish trend conditions and bearish trend conditions helps keep you on the right side of those trades. And then it goes as far as even letting you know what action you should take every single day. Should you be buying? Based on the stock that you're looking at, should you be selling that stock? Should you be placing your stop? I don't know any software that said, look, now is the day to be placing your stop. So most people will buy and automatically start placing stop. But in this software, sometimes they just tell you, don't do anything. Don't even place a stop. Just leave the trade the way it is. Do absolutely nothing, okay? And then on the day when it tells you place your stop, then you place your stop. The day it tells you to sell, then you want to sell. The day it tells you to buy, you want to buy, all right? And we have scans in there that would now help you see, hey, wait a second, here are stocks that are beginning to set up, because at the end of the day, it's those who train their eyes to see the setup that benefits, right? Those who train their eyes to see the setup are the ones that benefit. Now, this software is based off of a daily chart, okay? Unfortunately, it's just based off a daily chart. It doesn't go less than daily. So if you're a day trader, unfortunately, you won't be able to use it to help you day trade. But on the other hand, what it can do for you is let you know, wait a second, the market or this trend is a bullish trend, okay? And the market is setting up. When you know that a stock is setting up to be bullish probably for the next week or two, that could probably help you Not sure, but maybe it will help you. But it's more so for people who are swing traders, okay? It does have Forex in there. I don't focus on the Forex part, but it does the exact same thing. So if you buy it because of Forex, you can still use the software. You can still use it to help you see what's going on with particular pairs or stuff like that. But personally, I focus on the stocks more than I do anything else, okay? Actually, you know what? Let me do this. Let me show you example of this software. Since some people are already beginning to ask, let me see if I can do this. Hold on one second. Since people are asking, will it work on futures? No, we don't do futures. We primarily do stocks, and then we have Canadian stocks in there as well, and we have Forex in there. Okay, so here's a SPY, for instance. So this section right here that is green, this is what it's telling you. So look, we are bullish. That's what this is. So when you see this green section right here, so the market trend is bullish. What is it telling us recently right now? Okay, this is where a few days ago it was saying, look, market is bearish, be bearish and all that stuff. And then yesterday, okay, it's now telling us be bullish, right? But here's the interesting thing. Let me see if I can do this. If I zoom in into the software itself, or at least not the software, but the chart. Once I zoom into the chart, the section that I want you guys to pay attention to is stuff like this right here. This condition on the left hand side. All right. This is where I'm saying that it lets you know what the trade condition is. And so when you hover your mouse over like today, okay, what it's telling you is the fact that this is green right here. Okay, this is green right here. This tells us, okay, it's bullish. The market is bullish. But then you want to know, is it a strong bullish condition? Is it a weak bullish condition? Right now, what it's telling us as of last night is this is a strong bullish condition. And look at what the trade recommendation is, the trade action. As of yesterday, it was telling you the only thing you want to be doing right now is buying. Now you see the word cover there as well. The cover pretty much just lets you know, look, if you were shorted, you want to cover your shorts. This is not the time to be shorted the market. This is the time to be buying. If you go back over here, when we had that May 14 that I was telling you about, the same thing, right? It was telling you it's time to start buying. Now, most people would have seen this red candle the next day and said, oh my gosh, let me get out. But notice what the condition said. No, we're still in a strong bull market, and actually you need to be buying. Most people on this red day was like, oh, I saw YouTube videos coming out. Oh, the second wave is coming. It's time to short. And it's like, no, buy more. And then on this day, said, look, just hold on, don't buy anything else. So you have pretty much 2 days to like stop buying. Really, great setups that tells you get ready for a huge market that's ready to rally. And then it says, look, market condition is not as strong, it's kind of fair. Just hold off, don't do anything. Now, notice what it did tell you to do. It didn't say place your stop. It didn't say sell. It just says hold on. So what the hold on or wait tells you is, look, if you're already in, just hold on to your trades. Don't even bother going in and placing a stop. Why? Because then you get stopped out. How many times have we seen people say, man, I got into the trade, I placed a stop, it stopped me out right to the penny and then took off. Well, this helps you eliminate that problem going forward, because technical analysis will say, no, we're still seeing things are ready to go higher, but just don't do anything today. And then the next day comes, it's like, nope, where is the red candle? Oh, but we're losing some of our profits. I know, just hold on. There's nothing on technical analysis that's saying we're in a bear market just yet. And then what ends up happening is the market goes on, and then now it says place your stop. And when it tells you to place your stop, all you do is you just place your stop at the low of the previous day. The next day, you didn't get stopped out, and then it keeps on going. It says don't do anything, don't do anything. It says place your stop on this day, so you place your stop at the low of that candle. Next day, you didn't get stopped out. On this day, it says don't do anything. The next day, don't do anything. Right here, it said place your stop, but you didn't get stopped out. Next day went higher, so look, market is getting weak. Okay, yes, we're in a bear market, but look at the condition now. The condition has turned into weak. So it's like, we know, and all this is just technical analysis, ladies and gentlemen. Okay, it's not like some special insight. It's just understanding the right type of technical analysis that tells you what you should be paying attention to. Just like there's so many candlesticks out there, which ones should you be paying attention to? And so right here, say, look, I know the market is rallied. This is when everybody wants to start jumping in. Oh my gosh, I've missed out. But it's like, Notice what it's not telling you to do for the trade action. It's not telling you to buy, because what? The credit goes to the people who saw the setup. Everybody else wants to talk about this huge move later on, and it says, no, now's not the time to buy. The condition is actually weak. Yes, it's still bullish, but it's a weak bullish market now. Okay. And then the next day, it's like, just hold on, don't do anything, place your stop. Market is getting weak. Boom, you get stopped out. Okay. And that's the beauty of this. It literally guides you each and every day what you should or should not be doing. I can show you multiple examples, but unfortunately, I've ran out of time. Again, this is why I said I'm going to give you 90 days access to this so you can play around with this, just test it out, see how it works. And, you know, if after the 90 days you don't like it, then, you know, that's fine. But absolutely, many thanks. You're welcome. So I'm also going to give you another bonus, which is my right side report. I do this because this way you can see what I'm seeing every single week. I write about this report to let people know, hey, get ready. Market is ready to go up. Market is ready to go down. When everybody was panicking the last 2 weeks, I said, look, don't do anything. Market is still bullish. I said, just be patient. Look for buying opportunities. I said, when the market gives us these buying opportunities, you better jump on it. We had a webinar this past Monday, which is another thing you get to join us with. You get to join us for 3 months of live weekly webinars, okay, where we actually go into this. So you get 90 days of this right side report, as well as 90 days of webinars where we talk about how to use the software, what's going on in the market, how to take advantage of what's really going on. But the last 2-3 weeks when the market was doing really, really crazy, I said, no, guys, it's like, just be okay. Sit on the sidelines. Let's wait for the perfect opportunity. And when the market was dropping big, I said, guys, don't fall for it. Everybody else is going to tell you. And I would even tell people, I said, can you imagine what the headlines is going to be tomorrow based on this drop? And then you see it. And it's almost like predictable now. We can almost tell, oh, market drops because of coronavirus, right? And then market rallies, and they don't say the market rally because of coronavirus. They don't say anything, right? And then it's like, we're shocked. No, technical analysis would have told you what to see. So we give very concise expert insights and updates on current market conditions, which stocks are trading, which happens after that, and then on buys. Now, once you sign up, if you decide to renew your subscription, then instead of paying the $2.99 a month, well, actually the software itself is $2.99 a month as well. But instead of paying $2.99 a month, you'll be paying $97 a month if you decide to keep your subscription. So it's $100. We drop off $200 from that. You pay, you know, $100 a month. You get to keep the software each and every month after the 90 days over. Okay. All right. So here's the VIX volatility. The volatility, I'm going to give you access to this as well, so you can see this. Literally, this just helps you. Once you watch this video and then you start coming to these weekly webinars, you get to start seeing how to see when spikes and volatility is really beginning to affect the market, and see when institutional money is flowing in and out of the market. This is a huge part, because a lot of people that were just struggling with, why is the market going up? Why is the market going up? I mean, we would literally, to the day, let me show you something here. This is a text that I sent to one of our members, one of our subscribers. You can see the date on this text right here. Hopefully you guys can see this, March 24th, okay? March 24th. Everybody knows that the market bottomed on the 23rd of March, right? On March 24th, when I sent out this text, this is what I said. I said, the VIX is ready now. Markets are getting ready to start rallying again. I mean, how is it that we were able to see, and I'm telling people, the VIX is done. The VIX is ready, meaning that the VIX was ready to go down, which means the market is ready to go up. That's literally what I said on a text message on that day. And he came back and said, thanks, you know, because we were watching this. We were watching, say, hey, let's watch. Boom, we started, it's like, yep, there it is. The pattern was there again. The setup was there. We had trained our eyes to see the setup. It's like, it's there. And so from that point on, this is why I kept on telling people, don't you dare short the market. Don't you dare short the market. When the market pulls down, when the market pulls back, when we have bad days in the market, use it as opportunity to load more, because until we see the VIX showing us that there's problems, don't short the market, right? And so this allowed us to see how to tell when the volatility is over and the market's ready to go higher, just as much as we can see when the volatility is getting ready to spike and the market is ready to drop. So this is not coincidence. This is not randomness. This is learning to see what really matters through technical analysis. So here's everything. Again, just to wrap it all up, you can go to this site. I encourage you to take advantage of this. This would last until this special lasts up until Sunday night, midnight Eastern time. Okay, take advantage of it, guys. When you come to this workshop on Tuesday night, I promise you, I will show you not only the candlesticks that tells you when the market is bottoming, but tell you the candlesticks that tells you when the market is about to crash, just like we saw the market getting ready to crash. I'll tell you the candlestick that lets you know, look, selling is over. Market is ready to rally. It'll show you like, wow, we're about to enter a humongous trend, you know, and why I was like, do not short this market. Anybody that shorts this market is just going to be making a big mistake. And then now the market, I mean, the NASDAQ has reached all-time highs. I remember when the NASDAQ even reached all-time highs, some people say, well, it's just a NASDAQ. Let's see what happens to the others. And they kept on trying to short to their own demise. My time is up. I really hope that you guys take advantage of this. You can change the way you see the market going forward. No more blaming the Feds. You can actually be on the right side of this market going forward. Thank you so much, Investor Expo, for having us on. I look forward to seeing you guys on Tuesday night.
Yeah, so again, thank you very much for having me, giving me the opportunity to speak. I want to make it exciting for everybody. Today, I'm talking about trading and investing by market timing. What does it mean? Yeah, it has to do with time, but also it has to do with distance of a move, and it has to do with a relation of risk and reward. Yeah, so you might want to take some notes because I share a lot of integral knowledge, and I'm always making a different presentation. Yeah, I'm not always repeating. So what you saw from me maybe before, it'll not repeat it. There will be new things that are added on it. Trading is a wonderful thing, and we can capitalize on it. Before we do so, risk disclaimer, there's a risk in trading. I'm here as a trader educator, not broker, dealer, or financial advisor. With that said, let's dive into the dough. We do one-on-one training and coaching with our clients. We do that online at your best available time, at your best available days. We are more than 10 years in business, and we base our decisions and the ones we teach you on algorithms that spot and follow institutional money moves. Our name, Never Lost Trading. Some people say that's not possible. That's not what we claim. It comes from never stop loss trading. And so we try to repair trades, and we are looking for high probability trading. I'll refer to that. Means for us to win more than 65% of the time with the help sometimes of the never stop loss by repairing. So when we look at you, yeah, and a lot of you have different accounts, 401k account, IRA account, custodian. I put here cash account, yeah, because you know for the college tuition, and margin accounts. So what's the typical behavior of those accounts? Here, often people follow what the plan provider says, yeah. ING, Oppenheimer, whoever it is, they give some certain seminars. They say that could be good or bad, higher risk, lower risk, but a lot of times those are very balanced, and you follow this. Buy and hold on the IRA is the typical behavior. Buy and hold on custodian account, and on margin, a lot of the newer traders speculate a lot. They take a lot of risk. What I want to show you here is to make concise, consecutive decision with the help of a system for all these different accounts, and in addition, to consider hedging longer term positions if something goes wrong. It will not make it complicated with a hedge. I'll show you a very simple hedge, little on forward for 401k or an IRA that is going with the general market, but also we can definitely hedge with futures or with option strategies. So why does everybody act like that? Buy and hold for the last 10 years. Those I put here on the chart for you. We basically moved up. Yeah, we moved from 101 all the way to the vicinity of 305, 310, where we are right now, and made kind of like 11.7% year by year, and people are content with that. But look at the candles here in 2020. They're big and crazy. So we need to put something into your portfolio of action and knowledge to be able to cope with the market in the future, whatever it does. And I show you how you see here, our systems paint long and short opportunities by spelling out where to enter and what to do, long or short. So you saw here, short, 2 dots, 2 targets coming home. I'll go deeper into that. But for all your accounts, have a strategy, make your decisions based on daily, more for the margin account or the IRA, for the weekly, for 401k, IRA, custodian, or for monthly decisions, depending if you are a longer term investor. This should be your decision making points, and I show you examples. Let me start out with a weekly chart. Yeah, so here you see the S&P 500 based on the SPY. And what does it say? It said here, clear cut, there's a situation where you might want to get short. And there's a situation on it where short is over and might want to get long. Look, in our software, we frame the long environment in blue and the short environment in red. And here you saw they had a change in command, one handed over to the other. So, but what does it mean? How can you capitalize in your trading from this? Yeah, so let me do, when you started out with a high of 3010, and today, where we are, then we can add up and see the difference. So if you had started all the way up here, then basically you were at 310, yeah, and then today you are at 330, and so basically it's a 20 loss, yeah, over the high. So, but here when the call came and the cash came out, if you only took the cash out at 300, yes, that's what I signify here with the cursor, then you went back in here at 270, I just round that up. So this is what the results will show. You would have made a $40 contribution, how many shares or however many holdings you have. Now we calculate the difference between the two, and the difference between the two is spelling out as 40. How do I calculate it? Today's 310 compared to 270 entry, that's a 40 plus, and the total is a 60 difference between the buy and hold and just going cash protecting. So that's a $60 difference or 20% difference. Look, we look back in the last 10 years, we made an average of 11%. Within just one action, you made a 2 years income, because with the system and with the chart, you knew when to protect by just going cash and when to re-enter. And I show you more examples of this because this is what most of the traders are missing. And we want to share that with you, and we want to work with a smaller universe of people to educate and to get into this. So market timing on monthly basis, so I look longer term. We always want to spell out with market timing entry conditions. So you see buy thresholds, buy above 181.36, and two indicators say that, and here buy above 210.71. And there is a target dot where it says exit, and you look to the right, we also spell out a time. Here on that signal 1 to 5 bars, here on that signal 1 to 5 bars. Above the 1 bar we were in, here it took us 3 bars to come home. So what's the reason for all of that? We measure underlying changes in supply and demand, and with those changes in supply and demand, we signify the following. Entry conditions like these buy thresholds here, and I show you sell to, exit conditions, and the price move. Yeah, so how far shall the price move from here to here, and how long do you need to be in the trade? But also we put the stop conditions here, those crossbars, right on the chart for you. And we'll go into that. What was it? It was Autodesk. That was the example, and that's what we are looking at. Repetitive signals. Yeah, situation 1, buy signal, come to target, out after 3 bars. Buy signal, come to target. And we go on with that by measuring the underlying current or the underlying change in supply and demand and filter out signal from noise. And always at every signal, we put a target on here with a dot or sometimes with one of those cross lines. And I give you examples for that. We measure the expansion of the price move by SPU, speed unit, how much price change do we expect in the future with a high probability on the way up or down? And that helps us to specify entries, exits, and stop. And also, if things go wrong, we apply repairs. And the key will be, how do you find your trades? Yeah, trade finding. We have 3 ways of doing that. We have subscription to Never Lost Trading Alerts. We have own scanners, and I show you examples of the alerts where, for example, with the top line software, you find all your trades independent, but also you can subscribe, make it easy for you. Our alerts drop in between 3 a.m. and 4 a.m. And so you are right in front of the market for acting. Yeah, or you have your own watch list indicators on a chart when you look for a set of like 50 stocks or 50 assets that you want to look at. So that's going to help you. So monthly chart investing, how does it look like? I'll give you an example. So we spelled out end of May for June the following opportunities. Yeah, one short, all the rest long. So, and that's how it panned out. The system is good in signifying of what's going on, and we also qualified those. Yeah, so we went in and said, okay, where will be the entry condition? What's the entry price? So you can work with a buy stop or sell stop order. Where is the target price? And then we relate risk and reward. And you see here, eBay and AA, they came out best 2.1 to 1 and 3.4 to 1. So great relation between reward and risk, more than 2 times the reward or even 3 times towards the risk. But that's what the computer says. We need to do a chart validation. And that's what we're up for here. Here you see the chart for eBay on a monthly development, and we want to have signals that repeat themselves. So here's what we were looking at, May to June, but also let us look a little bit in the past. Situation 1 here in October saying, okay, short eBay confirmed in the next candle, target 1, target 2, target 1 we want to be 1 to 5 bars, target 2 1 to 10 bars, we were there quicker, yeah, coming to home, bringing that to target, and then we have a change in command, CIC. So we go to the upside with the stock. What we do, we go long, and that was again then reconfirmed in May, spelling out the goal, and we got right ticked out at that here at situation 2 at the target. So this is consecutive, concise trading where you always independent from subscription service or not. You see on your chart, because we put the software on for you, where to enter, where to exit, and you learn how long to stay in the trade and how to execute those trades on all type of time frames. Here for the AA example, you see also looking in the past, we first had a situation for a short. The target is right here behind that. And that's also a pattern we call light tower in and light tower out. When those occur in the same sequence, then we want to take the stop or take the exit, what I want to say here. But it is basically coming to target. And then we have a reversal. Here we have no dot on our orange signal on situation 2, but the target is below that line. So we work with the line, and it came home. So what we say here is give yourself the chance to work with clear-cut rules that you can see on your chart. Definitely on top line, we work 20 hours with you to learn all that and to put it in action. But the key will be so that you see those situations and you follow through when the action is on the chart. Options are a great tool for that. And with options, you can make a high return and you can balance, but they also have a big knowledge base. Yeah, you can do risk limiting trade, you can leverage your income, long and short strategies, and you need to know premium paying and collecting strategies. And with that in case, you need to answer yourself basically 7 variables that determine what you do. First is price indications. Do we have a move in front of us? What's a valid option chain? Because not every stock that has option has a good chain, because some have too little open interest or too little volume day by day. Can you repair the trade, or do you have the ability? Because when things go wrong, we don't want to lose 100% of what we put in. Yeah, we want to do a little less or even turn a loser into a winner. We want to always know for every situation. You see my software in the background making here and there a ring. So that's a wake-up call. Yeah, because our software spells out on the chart how much you pay at max for an option at the strike price that you shall enter and at the expiration day, and which option strategy to take. So those are a lot of things to answer, but I'll show you examples why that is meaningful to learn and what it can do for you. I give you an example for a client, and we have different clients, not only option traders. We always tailor our systems, our knowledge to what you prefer to do. I just give you one example here for the options. The trade preference for the client was options. He wanted to have a win ratio above 65%. That's what we subscribe ourselves to, and I'll show you a real life example. He wanted to make $2,500 per month. and he wanted to invest about 2 hours a day. Yeah, in preparation, execution, there was the time available for the client, and he was available more or less 5 days a week, and risk tolerance between 2 and 5%, so we pinned it down at 3%. Okay, so that's the basis what we started working from. Yeah, from that basis, the advantage is you have a much higher return opportunity with options compared to stocks. But there's a challenge. If you wanted to do 80% investment of your money, you have to find a lot of trades. Why? Just divide 80% by 3 or 80 by 3. So then you need to put about 25 trades through a month. That sounds high, but what is it? 1 to 2 trades a day. We have about 20 trading days in a month. So that's not over exaggerating. And with 2 hours of work, you will see in a moment what was possible, because I show you the result of the client between January and June. Yeah, end of June. So you see lots of trades, quality stocks, Boeing aircraft, FSLR, yeah, First Solar, then Win, FedEx, a lot of quality stocks, because that's important, and the system and the software found those opportunities, and then they were put forward without getting eye cheating on you and giving you so much detail to read. Put up here the summary. So the client wanted to make $2,500, but he does a little better. Yeah, so year to date he makes 64,000. And the key will be underlying, was he able to hit more than 65% trades right? And was he able to keep his winners bigger than the losers? Yeah, so first of all, we have here 36 trades in January, 61 only were winners, 39 did not work out. Yeah, so then here we have 74, 26, all the way to the back, where we basically have 68% winners and 32% losers. Yeah, so we were in our spec. But now let's look at underlying. Did we make it to have higher winners than losers? Big time in January. Yeah, 84% higher winners than losers. And all the way to the back here, when you see the gross average, 1116 average winner, 817 loser, so 28% higher winners than losers. That's the successful trade. But if you don't want to trade all these option trades, we always find something with our systems which is appealing to you. Yeah, so here I put out, if you want a day trade, how many trades, if you want a swing trade, if you want a long-term invest, or do a combination of them, we always puzzle something together. One thing you see, based on the expected returns, the sweet spot is in options. But the key will be that you execute a good amount of trades. But what is 1 to 2 trades a day, for example? But if you want a day trade, the system does that, and I show you examples of how you can do it and take your trade right from the chart. But this is the imperative here, so that you answer these questions or have somebody, and that's what we offer, to help you answering those, because else you never get into the option sweet spot, you get into an option nightmare. Yeah, and to put that all together, we're supposed to have a business plan for trading success. So what are we talking about? We want to have and work with you and with every client on the written plan, a financial plan, and an action plan. So what's behind this? We work out the situations when to enter a trade, when not to enter a trade, also very important. Best strategy, what do you want to do? Yeah, stock with option, what's a good strategy that suits you, when to exit, and all of that in your risk tolerance. And also you expect the time in the trade. How long do you want to hold this? You see here, formulated out. I don't want to read all these words to you, but it gives you a glimpse of what's going on and how trading can be. If you don't organize yourself as a trader, it'll be hard to make continuous income. And execution is the word, how to execute the trade. We want you to not fumble on the trade. When it's in, it's in. When it goes out, it goes out. Everything pre-programmed. You don't even need to be in front of your computer. So therefore, we send our alerts very early. If you have questions, we always have a support desk. And then you can put your things in action. You'll learn that through 20 hours of working together of how that does. And we do it at your best times, also weekends. Yeah. And so this is how a financial plan could look like. yeah, on that financial plan, you see different ways of trading. And here that client was looking at a 7.5% return by winning at about 65% of a rate. So that's all needed somehow to make a good trade. But at the end of the day, it is indicators showing you where is the action, rules of how you enter and exit, a roadmap of what to do, how do you replenish your trades, and have tools on hand to a price situation. Here, an appraisal tool, it was for Cisco. I just took an example out of May. Yeah, so a trade which we entered into. So you saw on the left-hand side, yeah, these pinkish part, there is where you put your evaluation criteria in. You take them from the chart, and then the system is giving you on the right-hand side a feedback if the trade was good, and it was, and so it was executed. These are key essential tools and rules for you to be lift up, to be the trader that you want to be. Have clear-cut rules here. So for example, you see Amazon, and it's just for the last couple of days, 6/19 to July 1. So first situation 1, yeah, buy me, but when target 2 is reached, we formulate a trade like that, then you get out. Situation 2 is short. If you just trade out of a cash account, you can't do the short, but you have a second situation with a long, here situation 3. And always we have the dot is on the chart for you. Yeah, it's not that I painted it on, the software does that. Target 1 is here, target 2 is here. After target 2, 85% probability for a pullback or haltering. That's what happens here. So therefore, out of the trade. Situation 2 came to target on here, and then it reverted. So it's important to have those targets on, because these are action points that institutions see and take and are also act on them. So now we have a reversal to the upside. Target 1, target 2, did it go higher? Absolutely, but it doesn't matter for us. We want to trade with our algorithm for the beef of the market and carry things out and forward with it. So day trading, yeah, I put an example because we have day traders to say, listen, I want to day trade with this. Absolutely, the system works, and I show you a different way of day trading at the moment. So you see here 3 stocks that came from the daily signal, yeah, Yum, Baidu, and Lulu. And then you see the very last column, intraday ranges, 110, 160, 450. Yeah, so I'll show you how to put those in action, because instead of trading by time, we trade partially for consecutive price range. So you see here, Yum, we trade for 110. And the system tells that day by day that might change, but you have it always on the report or on the chart for you. Yeah, so then you going back, I put the action in here. So you have situation 1, yeah, target 1. That's the only one we trade for with the system. And so how did it happen? First opening, confirmation, next candle ticked it out, trade with it, close it. Yeah, so sell out. Next, end of the day signal, confirmed at the open. Yeah, carry it home, out. Yeah, it was higher, doesn't matter to us. We take the trade out. Next, signal, confirmed in the next candle, 2 bars later, taken out. Did it go lower? Yes, but doesn't matter to us. We trade with our system. Then late in the day trade, we had to close this one at the end of the day, because as a day trader, that's what you're gonna do. Yeah, so next example here, Baidu, and we traded for 160 ticks, so that's $1.60, big deal. Yeah, and you have again the situation 1, end of the day signal, called or confirmed at the open. Then also with a signal on top, so we trade that through, exit, out. Reversal signal right at the opening of the day, came home, and then no signal that we want to take, because we're not going to take a signal at 1550 as a day trader, so that's pathetic. That's not what we're going to do. Yeah, so you see here situations followed through from monthly, weekly that I showed you, here intraday where you trade for a consecutive range. How does it work for futures? Does it work there too? I took an example. I took a time frame, 1 hour. So that's 1 hour on June 30th of the ES, the S&P 500 futures. Yeah, and we translated those. You can trade the contract here, the mini contract, or the MES. They go hand in hand with each other. So here you have trade situation 1, And yesterday, no situation. Late in the day, there was one and it came through, but here I just put the day session on. So target 2 was reached. 1, 2, 3, 4, 5. Okay, fine. And 29 points were made of $1,450. And yesterday, no money was made, but no money was lost either because no signal on the chart. We want you, and that's what I want to help here within sharing education, to be sound in your trading and investing decision. Find criteria of trade finding, chart appraisal, risk appraisal, trade strategy, position sizing. That has to be in it. If it's with us or somebody else, you need to have a scanner or a subscription telling you those are good trades to execute at that price level, to work with a buy stop, sell stop order. And this is the distance you want to trade for. The indicators of our charts that I showed you right here, that tell you this. And a risk appraisal that's on our dashboard, it's on top left of the chart, and I show you an example where then a relation between risk and reward of the trade is made. And then you saw, like in the examples that I showed you for eBay and AA, how to put that in action. Yeah, then strategy, option or hedging. Yeah, so if something goes wrong, will there be an automatic hedge for you? Not if you don't put it in place or you don't know what it is. And that's where a lot of the investors make a mistake here. They trade futures on very short time frames, but don't use them to protect an entire portfolio. So what do you do if you get a landslide in August and the market comes down 20%? Are you hedged? Will nothing happen to you? That's important. You should have those tools on hand. And trade execution, how to best put all these trades pre-programmed in. That's what we all teach in our 20 hours of working together. And as you can see here, there's clients with exceptional results, and they definitely paid back for their tuition within achieving that, but also that person was willing and doing 25 trades in average a month. Or we find what suits you, because that might look small, 6% times 12 months, that's striving for 72% return. And if you're a longer term trader and you say for 3%, I strive for per month times 12, 36% a month of income is 3 times what the average of the last 10 years was. And so therefore you definitely have an edge. Sweet spot still here in the option chain if you are handling it right. And so therefore, in summary, we help to put all of these in action with you in our mentorships, putting the server installed software, putting real-time data to use throughout Thinkorswim, that's the base platform that we are on, then finding entries, exits, and stops. You saw how we formulate them out. And do position sizing with you. Yeah, so how much of a trade to take, because this is where many new traders or retail traders make a problem to themselves. They oversize the risk of the losing positions and they undersize the risk of a winning position. And then the balance will never come to what I just shared to you, so that the performers are bigger than the losers, and that's what's needed for trading. And time in a trade. So what do if after 5 bars the trade is not at target? You get out, or you have a reconfirming signal, and we have those on the chart, or you just get out of the trade, because when things don't work out, you can move your money to the next. You have more trading opportunities with that system than money. And risk handling, how much risk you want to take. There's people that want to have a 1% risk per trade. There's people that want to have a 5% risk per trade. That's what we need to work out. But the 3% risk is very, very meaningful. That's a good way of operating with. And at the beginning, when you trade with a new system, it's like when you learn to drive or fly a new vehicle. Careful, that's important. Yeah, and then we work with you that business plan. It's not always the same, because trader for trader, you have a different affinity to different products, and with that will definitely help you to put all of these in action and forward in that business plan, so that you have a guideline you can orient yourself towards. That helps you executing. And also, if you made mistake, first of all, you can always come back to us. But if you made a mistake, check if that was in your business plan, or you just had a great emotion, and or somebody threw you an idea of what to trade. Yeah, we don't trade with ideas, we trade with indicators, because only with the indicators we are able to replicate and continuously produce trading success. Because here on such charts where you're guessing if it goes up or down and it's all past oriented, yeah, because you take the last 30 days and average two things up or down, these are standard indicators. They never ever give you more than 51% probability for succeeding, and that's very fragile. Most retail traders on the basis of this can never make money. You need to be above 65% to be in a range to make money, because sometimes things go wrong, but also as proposed, have hedges, have things in place. Here I combine two systems or three, there are two systems. And what it tells you here, red frames down, and you see you get consecutive calls to the downside and calls to the upside where you can participate in trades. And to do that, why are there so many signals? Because many of our clients buy more than one system. They start out with one, like with the top line, and then they pay it back and they say, look, it works. I just want to have a higher participation rate, and then you might add one. But one system is also sufficient and enough for you to give you good guidance for how things can work out. Yeah. Let me do just a live shot into a situation that you see on here. So that's Boeing aircraft, and we have a weekly chart. So you saw here short, yeah, coming down, first attempt to the upside. Didn't work out. Why? Next candle didn't tick it out, so no trade. But here you had the trade, and there we went with. And for a two SPU move, you see a SPU is here $30. So we capitalized on this. There was a reconfirmation on that, but we already were in the trade and took it home and end out at the end of these candles. So you see, these things work live. That's how we look in the market. We sure have our indicators, and we carry a good portfolio that we trade every day. And we want to invite you to be part of this, to learn to trade by clear-cut rules and by operating with rules, with indicators, within bringing things right on the chart. We want to take only a couple of specials today because we have a 2-for-1 deal, but that's not be spelled out here. We want you to give us a contact@neverlosstrading.com email and say, listen, let's look at it, because we want to get to know you for a moment and see what suits you best and how we can make a joint plan for carrying you into your trading future. Yeah, so that's our Independence Day special, a 2-for-1, because we want to combine top line and HF for those who are, for example, day traders, because these two in combination, they work super duper strong and fine. And we find other combinations for you, but we need to work with you to get an idea of what you want to reach, how many hours you have available, because there's people that say, listen, I only want to trade once a week from weekly charts and monthly charts. That's perfectly fine. It's doable. We always have a business plan for all of those situations. And you see with the situations that come from the chart time can be changed. And when the chart time is changed, then different situations come up. Or as I have explained prior, we also can trade for a consecutive price move. That means a price move from A to B, like $1.10 on Yum or $1.60 on a Baidu example. That is possible because our algorithm spells out, okay, the underlying price move is going to reach most likely from here to there and carries those things forward for you, helping you to find all your opportunities right on the chart. And so this is what we want to put in action for you. I just go back to a chart that I showed prior. Yeah, so you saw here on those situations, yeah, long and short on eBay, monthly chart. If you only want to trade your IRA, not that often, not on a daily basis, there's the opportunity. Yeah, situation one, but in the IRA, can you go short? Absolutely. You should have bought a put. But our system in relation to the SPU will spell out, and we show you which put to buy to participate in that downdraft. And here you knew exactly where to go out. And you can already pre-program, because a stock like eBay has like penny bid-ask spread. And so the moment it comes to that, you pre-program when eBay is at that price range, are going to be out of the trade. Yes, so you don't have to be in front of your computer. You might have a meeting or whatever going on. You don't have to be in front of the computer because these targets are on your chart and you can orient yourself towards them and imagine what you had made, because you knew at the beginning, if I want to trade for target 2, I need about 10 months on a chart, but we teach you also that you don't need to have an option that far out. We do a shorter term and we start rolling it, except it made so much money on the way down already that we just can take it off. And the same on the way up. Imagine on the price move when you entered here above 40 and you exited here in the area of 45 of 50. So that's a big price move. Yeah, that you can, particularly when you trade options, that you can capitalize on. And these are the opportunities I want to show you here. And these are the opportunities I want you to come on. And I want a small group of people. I'm looking for 5 people to work with, because we want to spend intensive time. We don't want to spend the intensive time with 100. We do not have classrooms where people are in. We had clients that only wanted to trade random length lumber futures. If you are in a classroom, you cannot capitalize on this. That person had a sawmill in Canada and supplied Home Depot and only was interested on hedging his commitment to Home Depot to have an annual price that's not fluctuating. So we helped how to make with that sawmill and with his lumber that he was selling a constant price. So either when the market price changed for wood and lumber, then he could make his money in the hedging account, and with that he could guarantee steady prices. Others want to trade Apple only. Does the system work for Apple only? Absolutely, but it's not advisable. Look, the thing as a good trader, you want to trade where prices move, and this is to be found by the system. So the system spells those out, as we did here on that chart, or as we did here for the short, yeah, on AA, Alcoa, yeah, so small stock, but with great returns, because look at here, on a monthly basis, it has a 43% statistical volatility. So that makes a 43% opportunity to move from A to B and make a return. And definitely you can participate within learning how to take an option if you are in an IRA where you can short, but if you can short the stock, that's wonderful. You know your risk to take, and the amount of contracts when you do options or the amount of stock you buy has to be in your risk agreement, about 3% give or take from your holdings. Good. So with that all said, if that makes sense to you, yeah, give us an email to contact@neverlosstrading.com or call the office 866-455-4520, and we start working with you. Now, also want to leave some time for questions. Are there questions of how I can help you? I need to see of how I can here get that chat box and expand it to see if I can answer your questions, folks. There's not much I can see on there, and so let me go through that. Hey, look, if you don't have questions at that point in time, don't hesitate. If you have them, shoot me an email. If you want to work with Never Lose Trading, shoot me that email too. And what we do is we'll get together, spend an hour getting to know each other, work with the charts. You can call the individual situation, and I'll show you what the outcome was in the past and what we can carry out into the future. Because as said, we are more than 10 years in business, and we made a lot of people independent to not move where their company wanted to move them, to move where they like to live, yeah, and to reduce their workload and be traders on the long-term basis. I'm finished a little bit more early then when there is no more question, but I don't want to overload you right in front of the holidays. And the holidays also kind of spell it out. You want to get independent, yeah, as a trader. So that offers a whole avenue of opportunity for you, yeah, being independent, knowing what to do, acting on clear-cut rules on the way in and on the way out of a trade. I hope I could inspire you to trading. It's a wonderful business. Why? You don't need clients. You can make it from the comfort of your home. if you know what to do, there is a business to be conducted somehow every day. You saw with the example where somebody did 1 to 2 trades a day. If you're a day trader, you should be able to get 3 trades into a day. However you want to split your budget, and we help you to split your budget. You saw here in a prior example where I showed, okay, a day trader who has 40,000 to invest can put everything basically in one trade, because 3% is $1,200. Yeah, so then that's the max risk to take, and you see on a chart between the entry and the risk of what you do, and that's the key thing to trading. You control the risk. You have an assumption for the outcome, but the risk is what you control. With that, I'll be finished here 5 minutes early today. Wish you a happy Independence Day. Thank you for Anna and your team for having me. And if you have questions, you got here my contact numbers. I'll be happy talking to you. Thank you very much. Good trading.